What's going on, guys? Everything is looking good on my end. Welcome to those of you already in chat. Let me know that you can hear me coming through clear and everything. And as soon as I hear somebody in the comments, I will get started here. All right, so welcome back to the channel, Crypto Trend Trader, with our Sunday night market update. Just going to take a look at our traditional assets and charts and kind of get an idea of what we can expect this week. Also going to discuss a little bit of what we heard from the Fed and, sort of the overall trend and mood of the markets, what we can kind of expect. Of course, before we get started, I would like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. Hello, welcome, South Africa. Good to hear. Good to have you. Oh, I already got a couple of messages. Let me take a look at what you guys said. Headed to bed here in Europe. Yeah, I thought about doing some earlier streams as well so that I can kind of appeal to. I know I have like a global audience, so I may start doing like one during the week, early on in the day. That way people in Europe can catch it. Because I know like doing the evening streams is not necessarily ideal as it's much later in different countries. I think mostly like 6 or 7 hour difference. So I may do like some earlier ones. I thought about doing like market streams too as the market's open, but we'll have to see what people are interested in. When are you going to get to see you? I mean, eventually, I guess. I don't know. I thought about setting like 1,000 subscriber goal or whatever. I'm not really, to me, it's not really that big of a deal. There's just not really like a ton of incentive for me to like put my face out there and everything because it's not like I'm famous or anything, but at the same time, like, yeah, not that people would just recognize me or anything like that, but I keep a decent amount of physical assets at my house and everything. So, there's a certain danger or risk associated with putting myself out there like fully. And I kind of like the discretion of the internet just because people are creepy. My channel's like not that big, obviously, and I've had like weird people like following me and sending me weird messages and emails, and I don't know, people are just creepy. And I feel like when you make it personal and put your face out there and everything, it takes it to the next level. So I guess like once it feels incentivized for me, I'll be more like apt to do that. So but regardless, let's go ahead and get started. We're going to run through our traditional list. I'm open to recommendations, suggestions, requests, etc. But we're going to get started with the 10-year and DXY like we always do. And then SPY, Dow Jones, IXIC, the NASDAQ, Russell, energy sector, clean energy. And then we'll transition into crypto. I've got on the list today Bitcoin. I'm going to look at Bitcoin futures chart, Polkadot, Doge, Link, Uni, ETH, BAT, and then we'll look at Riot Blockchain, MicroStrategy, and then we're going to work our way into like commodities or traditional assets, gold, silver, uranium. I've got First Majestic on there, Caterpillar, a couple cannabis stocks, Lemonade, and then finally we'll do some tech stuff, Tesla, NEO, Alibaba, Zoom, PayPal, Apple, Pinterest, and our semiconductors. So we will get started. First and foremost, and if you have any requests or anything along the way, feel free to post them in chat and I will add them on the list. So try to pick stuff that has a little bit of a history. I mean, if it's got like a month or two of history, it's hard for me to really like chart anything. And then we're just really getting into like fundamentals or like opinions. So as you can see, DXY has been responding exactly like we've been talking about for some time. I know it must get tiresome to hear me say this over and over again, but we were one of the first people who was specifically pointing out the relationship between DXY 10-year and what we expected to happen in these markets, and then comparing it all to not only traditional markets and like speculative assets like crypto, but also like commodities. So we have that confirmed breakout consolidation above the breakout channel, moved all the way to the top, found support just like we spoke about on the 89 after finding resistance multiple times, and now we're just headed up to meet our target. Our target is still that $92.66, which is the 200 exponential and simple, and then it's also the exact top of the channel. So to me, that is still our goal and looks like the most likely target short term. If you want to look a little more long term, we have our measured move, which is from the bottom of the channel to the top of the channel. That's still what I'm expecting over time. That's going to take us up to like the 377 and 528 breakdown area, which is like closer to like 95.35. And I know there's still a lot of confusion because people were expecting with the Biden plan and all that 1.9 trillion to go out, that the dollar was going to get decimated and we would be at zero by now and the whole world would be crumbling down and America would have gotten blown up by a volcano. But in all reality, all that stuff was already priced in. It was all accounted for way ahead of time. I mean, the stock market looks way ahead on all this stuff. They were talking about 1.9 trillion way ahead of time. Even before Biden won, it was already obvious that they were going to try to usher in like socialism. So we expected basically like the money printing and spending to go out of control. One thing that has happened, there's a couple of factors that are important with this. One, obviously, Europe is talking about printing tens or hundreds of billions of dollars as well. So we're looking at the relationship between, the euro and the rest of the basket of currencies in relation to the dollar when we look at this chart. So that would explain why the dollar would continue to strengthen here. And I think that the topping point, whether we get to it right here, like this week or in the next couple weeks, or whether we get like the full measured move or hit one of these other key moving averages, I think it's going to correspond like exactly like the strength in the dollar is going to correspond specifically with the 10-year treasury yields. So I would expect them to both top out, or at least like micro top out around the same time in their same like resistance areas accordingly. So I'm definitely expecting that to happen sometime in the near future. I would expect us to get this final move back up here and then at least come back down and retest the bottom of the channel. But zooming out a little bit and looking at this chart, people often forget this is the trend that we've been in. And essentially, this is way back in 1985. The dollar was at 1.129, strong, obviously. It bottomed out at 78, and then it got our move back up here and topped out again in 2001 at 120, and then we bottomed out here again in 2008 at 71 this time, and now, we basically have topped out here once again at 104. So is it possible that we are basically putting in, a big double top right here, and then we're going to go back down here to a new low? Yeah, on the macro, I definitely think that that's the most likely situation because we're in a clear downtrend. We have a high, we have a low, we have a lower high, we have a lower low, we have a third consecutive or second consecutive lower high, or a third, lower high, and then I would expect us to get a third lower low once again. Eventually could we break out of this pattern and skyrocket? Definitely could happen, but that would basically signal that, the rest of currencies are, well, the basket of currencies is weaker in relation to the dollar, and then we've broke out of this consolidation downtrend. What we do need to pay attention to is on the monthly, we now have basically a flat slope on the 200 exponential and the 200 simple moving average. So either one could happen. As long as we are above the 200 exponential and 200 simple moving average, I would expect us to enter into an uptrend and this to strengthen and then potentially break through that area. So we have, the 200 exponential and simple moving average on the monthly didn't populate until 2002. So it took like 15 years, a little more than 15 years to even populate on this chart because we need enough history to have an average. So this is essentially, back here when we entered, this is the exponential going into a positive slope. Right now, the simple has just moved into a positive slope since like October of 2019. So we're now confirming an uptrend on the dollar for the first time. So while we are in a descending channel, and again, I can turn these on, but there's just a lot going on. But you'll see like this perfect purple resistance line right here. While we're in a descending channel, going back to 1985, as long as we're inside of this channel, we're still in a downtrend, but the transfer is into an uptrend based on those moving averages. So that's what we're paying attention to. And, that's on a monthly. So this is an extremely long time frame. Now, the shorter time frames, will obviously like precede this and kind of tell us what's happening a little sooner. And you'll see that here we flipped over the 200 exponential and simple on the weekly into a downtrend, basically right around like the end, mid to end of 2020. So is it likely that we're going to enter a downtrend and continue on? Yes. But one thing that I like to pay attention to is people always talk about death crosses and golden crosses. The only real death cross and golden cross is the 50-200. So you can look at the 50 simple crossing the 200 simple. So that is our light blue right here and our light green right here crossing. So this was our death cross point right here at 95.51. If you look at where that happened at, it happened at the absolute bottom so far of this move. So let's look back to the last time that this took place. And this is a common misconception with death crosses. So, I think it's important that we talk about this. Here again, we have the 200 simple moving average moving up. We have the 50 simple moving average moving down. This is our death cross taking place right here. And look, this is the absolute bottom of the trend. So this is our bottom. And then from that bottom, we went into from February 2018 to our next top, which was March of 2020. So for over 2 years, we were in an uptrend at the exact point of the death cross. So everybody gets bearish, and then we go in a 2-year uptrend. So everybody got bearish right here at the bottom and said we have a death cross on the dollar on the weekly. The dollar's going to zero tomorrow. But what happens now? Do we go in a 2-year uptrend? Probably. I mean, that's not always going to happen like that, but it very often does. And if we look back to, this is obviously like a real choppy area. This is like the opposite of, what you could expect to happen with the death cross, or what people want to happen or think's going to happen is you have the death cross here take place. And then from then, that was in 2003, January. And then from that point on, we enter into an actual like legitimate death cross and, don't get the cross back up, don't bottom out until 2008. So I'm sorry, what is that? Yeah, 2008. So that's a 5-year downtrend on the dollar. So the real question is that, we have basically 2 examples of the death cross on this chart with sustained moved afterwards, and one is down afterwards and one is up afterwards. So essentially it's a difference between whether or not it gets saved. So before we get overly bearish on this thing, we should pay close attention to what's like potential going to take place. So are we going to see a move like this where we then get like a move back up and we save the death cross? Or are we going to see, a 5-year or 8-year or whatever downtrend off of it? Because either one is a possibility. And, based on our limited sample on the weekly here, that's telling us essentially that either one is a possibility. But now as long as we are below on the daily, the 200 exponential and simple moving averages, we're starting to flatten out the curve on them. But we got our death cross on them back in July of 2020 and then expected weakening dollar since then. But one important thing is everybody says we got to get out of the dollar because we're losing spending power. Well, at the same time, though, just because bullets are going down in price, you don't just like shoot all your bullets off expecting to buy them cheaper. You want to have money to buy assets when the time comes because liquidity or solvency might be an issue. In the same way that if you look at like canned food or something like that, just because all of a sudden like a recession is over doesn't mean you just like eat all your canned food and like finish prepping and don't ever worry about it again. No, you save some drive ammunition for like, when things might change. So in my opinion, during volatile times, during uncertain times, during like crazy economic conditions and situations like this, I think it's extremely smart to keep, a nice sized cash position so that when opportunities arise, you have the ability to get into them. Because, if you used all your dry powder months ago and then tech went into this like crazy 50% sell off or more, you had no dry powder left and you just took a massive hit on your positions. If you have dry powder and you decide that a lot of these assets have bottomed, you now have the opportunity to get back into them for 50% cheaper. So, if you take the funny thing people forget about moves is if you take a stock, let's say for instance, or a crypto that was at $100 and then it goes down to $50 and you were all in at 100, you lost 50% of your value. But if you buy a stock that was at $100 and it goes down to $50 and then you buy in at $50 and then it goes back to $100, so it's back up 50%, right? No, it's up 100%. So the 50% down move is the equivalence of a 100% up move. which is why it's so important to protect your capital. And that's why I like to always have capital on the sidelines ready to be deployed. And that's a very common misconception. And I can illustrate that later on, specifically with like Tesla or something like that. But let's transfer over to the 10-year treasury. This is doing exactly what we've been speaking about. It's just creeping along. We're just putting in nonstop higher highs on this thing. The Fed has come out already and basically said that nothing's going to change. Everything's fine. They're expecting inflation, but it's just going to be transient. It's going to be temporary on certain items. It's only because of supply chain restriction. Prices aren't going up. Everyone knows that prices are going up. Everyone knows there's inflation. Everyone knows that the CPI is a fake number. But when we look at charts, what we're looking at is essentially like we're going by the actual technical data that's offered to us. And in this case, we're looking at 10-year treasury yields. And that talks about the overall smartest investors, longest term investors, and what they're expecting. So as long as bond prices continue to fall, the yields continue to go up, we can expect that, inflation is not a risk right now, and it's not taking place. Alessio Rastani is a good technical analyst and also well-known name on YouTube. He recently put out a video a couple days ago that basically said exactly what I've been saying for months, that even though the 10-year treasury yields are going up or the treasuries themselves are going down, even though the dollar is losing strength in an overall downtrend, or other currencies are going up in relation to the dollar, aka the currency is losing buying power, those two things alone are not enough to count for inflation. We also need to see gold prices rising. And we have been in a downtrend since last year on gold prices. So while gold is in a sustained downtrend or corrective pattern, and these things are taking place, it's very clear that all three of these things need to take place in order for there to be inflation. So, he does a good job showing it off with a couple charts and some technical analysis. Also recommend him just overall. His videos are useful, informational, and, he's a smart guy. He doesn't just like speculate on stuff or just make stuff up or talk about why like lemonade is the next best thing, or he's all in on Tesla because Mars. He uses actual like technical analysis, and also, is diversified in different asset classes as well. So, everybody knows the 10-year, what we're expecting is that move up to 2%, 2.07. Is it going to happen this week? Probably not. Is it going to happen it could though, judging by these moves and everything, and we basically broke out, consolidated above our previous fib level. It could happen sooner than you think. But, we could also chop around for months in this area, and then finally, like, the Fed steps in. But I think it's probably going to happen sooner than later. So let's move over to, let's just run down the indexes first. So we're looking at SPY, S&P 500. This is a good indicator for the overall condition of the markets. Top 500 companies, obviously skewed a little bit since the introduction of Tesla and, its big sell-off and everything. It's obviously going to weaken as Technic takes like a hit and everything. And we all know it's taking a pretty substantial hit lately. But it's only down from 397 all-time high for, basically the last 4 days of last week. But what we do need to pay attention to is, we basically had like a pretty bearish week overall. If we switch over to the weekly chart, we took out, one thing I like to look at is after we hit like an all-time high area, which we essentially did on, like mid-February, we sold off, found support, came back up, and now we got rejected at that same area, on the weekly. So, we essentially have 1, 2, 3, 4, 5. We have basically 6 weeks of consolidation at this resistance level. So it is possible that we break through here. But what I don't like to see is once we put in an all-time high, I do not like to see a candle come afterwards, whether it's a weekly or a daily, that takes out more than 50% of that candle. Because everybody should be extremely bullish. We should see a bunch of volume coming in on buys as we're breaking to a new all-time high. So then once again, we break back up to that same new all-time high, and then immediately afterwards we see over 50% of the previous candle is bearishly like sold off, and then again we're not seeing a volume spike come in. So to me, it's not really confirmation. It's not bullish. It doesn't have to be bearish. We could easily break out from here, but it's not what I like to see. We did get the hard sell in this region here on the weekly, but we never left the bullish control zone. So while we're at the top of the range already and we don't want to get bearish, we are still inside the bullish control zone. We could easily move back down here to like that 80 level, find support and move up. And this is just like a bullish consolidation before another push to the upside. But we're already at like extremely high levels right now. There's not a lot of fuel left in the tank. So we need to be careful of exiting the bullish control zone and getting like a hard sell signal as we exit the bullish control zone and get like a bigger move. Now, this is what I'm paying attention to though, is on the weekly. The last time we got this hard sell here back in May of 2019, we got only a few percent move right here, never crossed to the downside. Here we got the hard sell, left the bullish control zone. You know, that was basically at the bottom, only a few percent move. You know, never got the cross on the 821, the red and yellow to the downside. Here, when we went into like the CV, like massive capitulation dump, we stayed inside the bullish control zone after we got the hard sell, you know, got the cross, left the bullish control zone, and got a massive, massive dump. So and that was right after putting in an all-time high. So from the all-time high to that sell-off, it was 35% in the S&P, and that was prior to Tesla getting added, which, you know, I think Tesla only makes up like 4 or 6%, I can't remember, I'd have to actually look, of the S&P. But if tech takes a serious hit, if some of these other bubbles pop and all of a sudden like the numbers we're looking at are different, it can make a big difference on these things because they're weighted based on like not only the market cap of something, but also like the price of it too. So you know, if we saw like a 35% sell-off, oh, this is the next one here too. So we have two situations where we left the bullish control zone and then got a small dump. And then we have one situation, usually those are more reliable signals. Then we have one signal like this where we stay inside the bullish control zone, get the hard sell, and then we get a massive capitulation event. So here we have the same thing happen again. We exit the bullish control zone, get the hard sell, and barely get a dump, come back down and just retest the same area and never cross the 821 to the downside. So here we stayed inside the bullish control zone, got the hard sell, and we're showing more weakness here than we have, you know, I guess about the same as we have on these previous sell-offs. So need to be very careful that this signature is not going to turn into something like this, because the previous signatures, these three, all look the same and all resulted in a very small dump. The one big one that we got looks exactly like the signature that we have right now. You'll notice that the knife is clearly below. The green and red of the knife is clearly below and retesting and getting rejected off the 80 level at the same time this happens. So if we start to see this knife strengthening to the downside here, it's going to look very, very clearly like that we're about to get another capitulation, like, you know, extinction event. 35%, let's just say, hypothetically, if it happened from the top right here, you know, where's that going to put us at? Somewhere around the 263 level. So, you know, lose about $130 worth of this bad boy. It's going to put us right at that 377. The previous time when we came down, we hit almost perfectly the 528. So the 377, even if we came down to the 528 and got like, you know, a 40 or plus % sell off, we would still be putting in a higher low. So we're still in an uptrend. We're just retesting the bottom of, man, that's so dirty. Retesting like the bottom of like this area here. But essentially what could be taking place, and again, I'm not saying this is going to happen, but there is a high likelihood that we would be breaking down from like this triangle pattern that we've been putting in this long-term trending channel. I like to always remind people, this goes back here to 2009. We have been inside this blue support, red resistance since 2009. We poked out of it a couple times, including the dump in March. We poked out of it on the top a couple of times, and we're right at the top right now. So even if we stay inside this trading range, which if you watch my videos before, you know that one of my like slogans is we're going to stay inside the range until we don't. We're going to break the range one time, and then we'll get a movement in that direction. If we get the measured move of either the blue or the green triangle that's forming inside of here, you know, essentially like all that is just an ascending wedge. Price is going up inside of a range, and then it's also tightening. So here we have a big broad range, and it's getting less and less broad, tightening, tightening, tightening. So eventually we're going to break this range 100% guaranteed. There's no more room left. On the weekly, we could probably put 3 more candles inside of here, and then after that we will break the range. So the question is, are we going to break to the upside and break out of this channel that we've been inside of since 2009? Probably not. the likelihood of breaking the 2009 channel is very unlikely. It seems much more likely to me that we would now retest the bottom of that channel and then just continue to operate inside that range over the next 10 or 20 or 50 years until something big happens and changes. So if we used a ton of gas to get back up from outside of the channel back into the channel all the way to the top, it seems very likely to me that we would get these measured moves come back down to the 382 retracement of the move since those March lows back down to the bottom of the channel at about 313. So 313 is my target. Is it going to happen? I don't know. I'm not sure. Who knows? We're going to play it by ear, but that's a 20% sell-off. Seems very likely to me right now, especially with like the Biden tax plan coming into effect. If we're going to jump now all of a sudden from all these, we're clearly in a bubble in all these markets. We've had a massive run up. Even if you don't believe we're in a bubble and we're going to get another, 10-year bull market out of this, you have to understand that a lot of these companies are not even profitable. A lot of them are zombie companies, barely surviving, able to pay their interest just to like remain in existence, and are counting on stimulus bailouts basically just to even like keep them going. And you can't argue that. It's a fact. There's tons of companies, everything from airlines to restaurants to small businesses, all these different companies. Even Tesla like relies on, clean energy subsidies, like all this stuff. It's all relying on government aid and tax breaks to even get to these elevated prices. And then the elevated prices are relying on basically 0% interest rates. And now the interest rates have only slightly increased, and we're all the way back at the top of the range now. So if we do get a temporary top right here, it seems likely that, a lot of these companies are really going to be in trouble. If you're just getting by and then all of a sudden your interest starts going up, or you stop getting less help from the government or less bailouts, or start having to pay more taxes, if all of a sudden the corporate tax rate or capital gains tax goes from 21, 22% up to 26 or 28%, which is what Biden's proposing, that eats massively into your profits. Because before you ever get to your profits, all your like costs and expenses and all this stuff come out. So if you start with $1 million in sales and then you take out like all your operating expenses to pay your staff and own a business, and whatever your business is, like you have a building and you have staff and you have cost of goods sold and you have research and development and you have advertising and all this stuff, that $1 million in sales gets quickly depleted, and the next thing you know, you're making $100,000 in profits. And then if you're making $100,000 in profits and you're paying 21% of that, now you're making $79,000, $78,000 in profits. So then if all of a sudden that tax rate goes up to 28%, now you lost another like $6,000, $7,000, $8,000 in profits out of that 100. So you went from 78 down to 70 now, or 72 or something like that. So if you think about that as a percentage, yes, the tax rate only went up by 6% or whatever, but by the time you take into account all those other factors, you've now decreased your profits from, let's say, 78,000 in a 22% tax rate on a 10% profit of $1 million, which is 100,000 of the million in profits, and then you take away your taxes at 22%, and then all of a sudden it goes up and it goes down to that $78,000 in profits goes down to $72,000 in profits. You lost $6,000. So it's a massive hit to a company, and that's assuming that you're even like doing that well. A lot of these companies are barely making any money, which actually, if you're not making any money, you're probably better off, if the taxes go up, because it's not going to affect you. But it's going to hit people's net income on these companies and turn a lot of companies that were barely profitable into not profitable, or the stimulus starts picking up, everything gets better, and then all of a sudden these companies just go to total shit. So got to be real careful here. And that's just one aspect of the taxes. If personal income tax goes up as well, it's going to create less jobs. Companies are going to trim the fat. The prices are going to go up to account for, less profitability. There's a lot of negative things that happen. So, one of the worst things you can do is prop up an economy with low interest rates and stimulus. And then on top of that, while the economy is still in shit shape, you start taxing the hell out of them, or raising taxes on the people that are still making the economy grow or go or just even remain. That's all negative stuff. and then you raise minimum wage on top of that. So you're going to kill so many jobs. It's like unbelievable. And then you have a clean energy initiative. So you shut down like pipelines and all this other stuff, border walls, because you have a big plan on all this stuff. And you're just like killing jobs left and right, killing jobs left and right. And then all of a sudden, like corporate taxes go up. So, businesses move overseas, go to Mexico, go to Europe. There's a lot of reasons that, you're basically taking a dump on the American economy. So we'll see how it all plays out. But, seems more likely than not that we would see this move to the downside rather than a move to the upside. So what's up, guys? Welcome. Glad to have you guys. I'll jump over to the comments here shortly as well. Just throwing a little rant in like mid-video as well. So Dow Jones, same situation here. We have this massive, massive, massive pattern. Let's just zoom way out here and talk about this for a second. People lose sight of what's happening on these assets, but I mean, this is the weekly. Let's go to the monthly so we can get an even bigger perspective. This is our monthly Dow Jones chart. Goes back to, what's that? 1929. I don't see too many people looking at charts that go back to 1929. But if you look at the top here in 1929 and then our bottom here in 1932, and then you look how many touches we've gotten along the bottom of the channel and along the top of the channel, and here we are at the top of the channel again. That's, keep in mind, 1929. Now let's go back to our weekly here and take a look at what's going on. So now here we are at the weekly at the top of the channel. That's that purple line right there is the 1929 channel. And then we've developed this massive, you can call it a megaphone, a broadening wedge, whatever you want to call it. We have a tight range and it's slowly getting wider and wider. So we have a bunch of touches now on the top and we've broken out the top of a channel that's been going on since 1929. So we're looking at a 100-year trend and we're potentially breaking out to the upside. What seems more likely? That we have low volume and we're breaking out to the upside and that this is going to get rejected and break back down inside of the channel, inside of the pattern, or that this is it and we have low volume coming in and that all of a sudden like the economy is just booming and we're on a next level and we're getting ready to break out of a 90-year pattern. Probably seems more likely that we'll come back down and retest the bottom or at least the mid-range. As we talk about often, when you break out of a long trending pattern or channel, you very rarely come from the top to the bottom and then break out the top, or from the bottom to the top and then break out the bottom. You almost always come from the top to the bottom, back to the top, and then to the midline and then break out the top, or vice versa. If you're going to break out the bottom, you'll come to the bottom, come back to the midline, and then break out the bottom. So in this case, we have that megaphone inside of the channel. So if we don't violate the channel, which is what I would expect, what seems more likely to me now is we break out here, fail to break out, fail to consolidate above our key resistances, and then break down inside. So my first target would be 25,900 on the Dow, which is a 200 exponential and simple on the weekly. And then, that was our touch of the 200 exponential simple. That was our touch right here. Broke down from it, came back up, found resistance, and then came to the top of the channel. So I think it's likely we would break down to the bottom, or the middle of the channel right here, the heart line of the channel in the 200 exponentials, and then find strength and break out to the top based on technicals and fundamentals. Or we come back down and retest the bottom of the channel. Or, what seems less likely once again is that we would come down to a new low right here and break out the bottom of the channel, because again, that's a 90-year channel. So this pattern has been going on since February 2018. So that's about a 3-year pattern we've been inside of. So I would assume that we would come down here, potentially back down to like the 20,000 range at the most, or possibly wick down to the bottom here, but I don't think it's as likely that we would just break out of this all of a sudden. So, and then if we look at this on the daily, go to a shorter time frame, we want to pay attention to what's happening here. We are getting multiple histograms in a row. We are still inside the bullish control zone, but, this looks weak at the top of a range. If we come down here, find support, and then get continuation, it'll look strong. If we break down inside this range and back inside the channel or the megaphone, it's going to look weak. So energy, we got the IXIC, this is NASDAQ. So NASDAQ next, and then we'll do the Russell, and then we'll get to energy. So NASDAQ, similar situation. You know, we've got the pattern going on. We got rejected on the 821 cross back to the upside. We were hoping to find strength. We are obviously seeing a lot of weakness in the tech sector right now. So, you know, from the top of the tech to the bottom, we got a 12.5% sell-off. You know, from where we're at right now, we're basically down like 6-7%. It's not bad. Overall, you know, tech is weak right now, but a lot of like the bubble stocks or like first movers or, you know, big gainers have sold off the most. So we're paying attention to them and we're going to see how it translates. But, you know, this to me, you know, we were up here in the bullish control zone. We got a hard buy coming in right here, but essentially at the top of the range, failed to cross the 821 back to the upside. So I would expect more likely than not that we'll come back down to 12,914 here and try to find support on the 89. If we don't, I think we'll take out this low right here, and it's going to look like an A, a B, and then a C correction. I would expect us to come back down to this previous resistance, like triple top right here, and the 200 exponential simple moving averages. So 11,950, 12,000 is my main target. This looks like right here a you know, bearish consolidation. Price is basically down or going sideways, like just consolidating, while the oscillator resets back to the upside, and then we get rejected here at the bullish control zone and then dumps back down, and we now have reset the energy of these oscillator indicators back to the upside, and then we can sell back down. You know, we can't just stay at the bottom forever, like oversold or with massive momentum to the downside. We have to like basically like just recuperate. So that's what it looks like is taking place right now on the NASDAQ and our tech sector. And then if we look at the Russell 2000, you know, this is a broader market indicator. So we had like no strength in smaller companies, and then all of a sudden the market broadened out into like the smaller cap companies here. But what we need to pay attention to is what happened here. We have a high right here. We have a lower high right here. We have another lower high right here. We have strong blue momentum to the upside. Then we have red sell-off, slope to the downside. Then we have a weak blue momentum, then slope to the downside. Then we have a almost non-existent blue momentum, and one of the most reliable signals on my indicator. And if you're not using this indicator, I highly recommend it. The regular MACD is cool and everything, but this is absolutely phenomenal to me. Traders Dynamic MACD, you know, very easy to read. And this is one of our most reliable signals for a rejection. When you're underneath the slope line and you flip it back over blue. So the slope is blue, but we're under price action. It's basically like impossible, because in order for the slope to flip over blue, you need to be above the slope line to pull it back over. So this means that we were able to flip it back over without getting above it, and then we got rejected. That's one of our most reliable indicators. So we have a triple divergence here. We have a high, we have a higher high, we have a higher high, we have a high, we have a lower high, we have a lower high. So we have triple bearish divergence on this indicator. And then if we look at the jewel thief as well, you'll notice that we had a high right here. We were able to put in a slightly higher high right here, but now here we are at that same high again. So it's not quite triple divergence, but we need to be careful here because, you know, the divergence, depending on what you have your settings at, this is triple divergence, but I like these settings personally myself. I also like to use this knife because it works perfectly. You know, knife came in here. We got a little more creeping up to the top. Knife came in right here. That was our bottom. Knife came in right here. You know, that was our top. Knife came in right here. That was our bottom. The knife, and if you're not familiar with the knife is, you know, this green and red line, and it's not as much about the color of it as it is about the range that it's taking place in and the violence of the move. This is an extremely sharp, violent knife. Extremely sharp, violent, extremely sharp, violent, extremely sharp, violent, extremely, you know, not quite as sharp, but, you know, violent move. And, it, you know, I call it the knife because it looks like a knife stabbing up out of the range. So here we are with this one. I would expect continuation to the downside off of this. This one was less violent, so less power went into this, less momentum went into this, less buying power went into this. But we'll see what happens on the downside here, because a lot of times we'll get something like this and then a violent stab to the downside. So with that triple bearish divergence, we need to be very careful on this one. It's likely that this was just a broadening of the markets, got us a push up here to a new high, and now people will get scared again and pull their money back into, you know, the first movers, or take that safety trade out of just all these undervalued assets. Because that's what this is. This is people moving into the undervalued stuff. They say, oh, tech's gone enough. Market movers have gone up enough. We need to now broaden back out into the economy as like the recovery takes place. Everybody buy banks, buy airlines, buy small businesses. But like in all actuality, you know, it's just propped up by stimulus and policy. And, you know, these companies are really, there's a reason they all suck. Like there's a reason cruise lines suck. There's a reason, you know, airlines need billion-dollar bailouts. There's a reason all these companies are doing shitty right now. You know, regular companies, not tech companies. You know, people can't use stores that they need to use. People can't get products that they need to buy. People are stuck at home. Schools are not open. Like, you know, there's a reason that all this was taking place and these companies were undervalued. So when all of a sudden everybody broadens out and this reopening trade takes place, and then all of a sudden the reopening fails, or, you know, the taxes go up, or the stimulus gets pulled, you know, all of a sudden reality kicks in and it's like, oh shit, interest rates are up. Things aren't just going back to how they were. And then this is going to sell off. And, you know, when it sells off, is it going to go back down to 2146? Yeah, definitely going to retest this low right here, but I would expect it to come back down to the 89 and retest this bottoming pattern that we put in. There's one bottom right there, one bottom right there. I think it's very likely we come back down even on a wick to 2007-9. But in all reality, we could easily be right back here at 1866 before long. Triple bearish divergence on a move like this, on basically what was just a reopening trade and nothing else behind it. It's just like the broadening out of the markets. And then all of a sudden people realize, hang on, we're playing musical chairs and all the chairs are about to get pulled. The game is still going. Things are not back to usual. All of a sudden 236 retracement, 1913, or even as low as like 1675 looks real likely. But again, don't get overly bearish on these markets. But it looks like we're losing this cross right here. We saved it this time. We saved it a couple of times on the way up, and we had a nice slope on these moving averages. Here, we crossed it down, and we barely saved it and bounced it. You know, but we've lost our slope now. We barely have any slope on these moving averages now. So it looks like we're just getting ready to roll over. Now, could we find strength here and continue to the upside? For sure. But I need to see something in the charts that tells me this is strong and there's potential. Because if you look at the technicals or even the fundamentals, they don't look great to me short term. Long term, of course, I believe in America. I believe in the stock market. I believe in, you know, society as a whole, that we'll find a way through. But at the same time, you know, let's look at the technicals here. So I'm going to jump over in comments here soon. Appreciate everybody that's jumped in here. Good to see you guys. Some of the regulars, some newbies too. Appreciate that I'm finding some new people. Obviously not the most popular channel because I tell it how it is. I don't just get on here and tell you how handsome and smart your kids are. You know, I get on here and I call your kids ugly, but I do it before anybody else does so that you can realize that, hey, your investments are shit or the cycle is over. Get out before it's too late. I'm not just going to sit here and talk about how good gold is for 10 years and then one day be right, or how shitty Bitcoin is for 10 years and then one day be right. I'm going to tell you exactly what the charts are telling you, and I'm going to do it in real time. So, you know, maybe you realize one day that your kid is ugly, but in the meantime, you know, get a bunch of trophies because it's okay. But that's how it is. I tell it how it is. And that's how you make money in these markets. Broaden your investments, protect your capital, and be realistic. Use technicals, not BS fundamentals. So XLE Energy, if you're just jumping in too, guys, it's not financial advice. I'm not your financial advisor. Markets are extremely volatile. Please do your own research, trade responsibly. You know, this is exactly what we've been talking about. We topped out in that exact area we were expecting. We have a ton of resistance up here. That was a key area we were expecting to top out in. Depending how far back we go, you know, this was a key resistance area. That was the bottom right here, support. Bottom right here, support. So we expected that to be resistance when we got up to it. You know, we sold off. I am overall bullish on the energy sector, but it looks very likely to me that what's taking place is that was our 1, that was our 2. Here's our 3 maxing out. We're going to come back down on that 4, at least slightly lower here, get a retracement. Also, this could just be part of the 3 and we find support right here and then get continuation to the upside. I think that looks more likely overall. But we really got to be careful on this one. What's taking place, because we are at key resistance. Even if we got up to like 57 right here, you know, we did flip over the 200 exponential and simple. There's definitely potential for this thing to run, but in the meantime, it is showing some weakness. I would expect at least a retest back down here. Try to save this 8 and 21 cross to the downside like we did previous times right here. But it looks like we're going to get a retest of like at least the 377,528, which lines up with like the 50, 55. I think we got another like potential 10% move to the downside on this. We'll have to look, see what happens, pay attention to it. Let's go to the weekly real quick and take a look. If we go to the weekly on this thing, on the daily, if this is a 1, 2, 3, the daily doesn't look like we have as much room to run. But on the weekly, we could come down here basically, on a close down here at like $44 and still look bullish and still have like a potential Elliott wave structure in place without like any violation or any like, scariness coming in. But when we sold off here, we sold off back down to the 786, which is like, that's a pretty heavy retracement on an uptrend. If we look at our extensions for the wave 3, if we're potentially moving up right here, we hit to 1.236, which is a key area to find resistance, and also the 200 exponential and simple. But I would expect us to get back up here to like 65, potentially on this wave and hit the 1.618 realistically. That also gives us a lot more room for a respectable pullback. If we come up here to like 65 and then we get a pullback on this wave right here, it's going to look a lot more realistic. That would put us back up here, and then that same pullback down to like that 45 level from there is going to be like a 382. So that seems more realistic after like a 786 pullback that we would get like a 382 or a 0.5 at least, rather than just coming up here and getting like, if we just pull back right now and we pull back down to the top of this, like that 45 range, it's going to be a 236 pullback. That's like literally the most bullish pullback possible and seems unlikely after a 786. So if this is going to work out into like an Elliott wave, 5-wave structure, I would expect a little more continuation on this 3 and more likely get up here to like the 65, 67 range. Also, if we look at this like a little shorter time frame, it almost looks like we could pull like a 1, like 2 in this area, either from here or from here, and then this could be our 3, get slight continuation, and then get a 4 and then a 5, and then we have basically a 5-wave structure developed inside of our 3. So it would be like a micro 5-wave structure inside of our macro. That's our wave 1 macro, that's our wave 3 macro, and then we would get like a wave 5 macro, which is what I would be expecting. But again, we're at the top of the bullish control zone. We've had a massive move up here from like 28. We basically doubled up 100% on this. So it seems likely that we need to cool off these indicator oscillators, but we're in a strong uptrend on the weekly right now. At the 200 exponential and simple, flattening out the curve on these things. So I think we could break up above them, come back down, find support, potentially sell back off. To me, it looks like this thing could come back down here to like 45, but I would expect continuation at least short term before like a massive pullback. Pay attention to it. It's not going to happen overnight, but I definitely think that's our most likely situation scenario. Let's look at the ICLN, the iShare Trust. This is the Global Clean Energy ETF. Based on like fundamentals, macro and everything, I think this is likely to have a nice move up, but obviously we've had a massive sell-off already on this thing, from basically up here $35 down to like, the 20s. That is a huge pullback, 36%. Looking at this as just one massive wave right here. We could easily pull back down to at least the 38.2 at $20, or down to the 0.5 is like the maximum I would expect. Or we could make it to the 618 and retest the top of this previous wave right here. I think that's unlikely. I think the 528 would probably pick it up around like 1660. But I think this has a ton of potential to the upside in time. But right now, we're still in a powerful downtrend. We're bouncing the 200 exponential. But what I want to see when we hit that 200 exponential is, I want to see a move back up, a complete rejection of lower prices, and then like continuation. That's not what we're getting. We have an 821 cross on the daily. We have a weak bounce that could not even get above the 21, and then a massive sell-off back down below the 8. I think we're likely to get another weak bounce right here rejection off the 236 and then come down at least to the 200 simple or the 382. So it looks more likely that we're going to end up at 20 bucks on this thing or 1985, that we're just going to like take back off to the upside and take out that 35 range. So, but again, you know, if you just start looking at this as like a potential long, like risk reward to the upside on this thing, you know, if you're bullish on this and you think it's going back up to the upside, and you're bearish on this thing and you think it's going to go like, you know, continue to the downside, even at a 17% loss back to the 382 before you realize you're wrong and this thing's just going to die, you know, you've got a 3-to-1 move risk reward just to retest like the previous high back here from January 2008. So, you know, if we make it even back to that previous high, that's a 46% move to the upside. If we come back down here and put in a lower low, take out the 382, and it looks like we really are going to come back down to the 0.5, you know, if you're going to like get out of your position or at least just look at a risk reward ratio, you know, you got a 3-to-1 just back to that previous high. So, you know, based on like fundamentals and technicals and the Biden clean energy like infrastructure plan and just the overall shift towards like clean energy in the future, you know, I think this has got potential here. Now, I would rather take my time and get into it here and, you know, potentially see it pull back to the 0.5 and risk 18%, but get a much less, you know, much better entry, you know, with a 72% upside potential just back to that previous high with an 18% downside potential over a 4-to-1 risk reward. But I mean, there's no reason you can't just take both. There's no reason you can't take an entry off the 382 and an entry off the 0.5. Again, this is not financial advice. I'm not your financial advisor, but you know, that's what I'd be paying attention to, is like looking at this as essentially like, you know, just getting into, I mean, you know, getting into like this potential trade over time without actually putting in like a hard stop, but just looking at like lower prices as like a better buying opportunity, you know. And if we get back down here to the 0.5, you can potentially just enter a third trade off of that level. But, you know, in all reality, the way I look at this is, you know, ideally, I would love to buy it down here, but is it likely to get that low? I think it's much less likely to get down that low. But, you know, again, the upside potential is just massive if it does, because you're looking at 20% more to the downside, but now 100% back to the upside. So, you know, paying attention to this right now, it looks like an A wave retracement followed by like, you know, we could get more move to the upside back here and get rejected at a key level and get put in a B. This could be our B right here, and then we could put in a C down to that 382 or a C down as low as the 0.5. But, you know, this already had a massive sell-off, so I'm looking at potentially like getting into this ideally around like that 1983 range, but potentially as low as like 1660. But, you know, I'm not putting like hard stops in place on this either. You know, if you were going to put a hard stop in place, it would have been way back in this region, you know, with the 821 cross. You would have got out of your position back here at like 30.50. And then you're already looking at potential like, you know, this is already looking like a great entry regardless to start laddering back in anywhere in this range, because you're already getting like 25% more of a position just by de-risking out of this asset at the 821 cross. So I think that's it for, yeah, that's it. All I got so far on these. So I'm going to take a look over here at what we got going on in the comments section and interact with you guys a little bit, and then we'll jump into crypto after that. So SAR USD. Bitcoin hard, BCH USD. Welcome. No problem that you're late, brother. You can always go back and watch it later. Why don't I use the Bollinger Bands? Bollinger Bands are all right, man. You know, it's basically just, I mean, you can look at standard deviations if you want. One of my key indicators that I have published is the, oh my gosh, I can't think of the name right now. The TJD PSAR with B pivots, parabolic SAR with binary pivots. And, you know, it basically has your Bollinger Bands built into your moving averages with the parabolic SAR and the binary pivots. It works great. You know, it's actually a really good indicator. And it's basically like the old version of this one. It's a great indicator. It's just not my style. It basically tells you a lot of what's already being told to you, and then I just don't like how it makes the chart look. It's not as easy for me to just glance at something and look at it. It also manipulates like the depth that it shows you on the chart. It sort of like squishes your chart down and makes it like sort of like just a sideways little chart. So I don't like it as much, but it doesn't mean there's anything wrong with it. I mean, you can easily use it if you want. It's just not my style. I mean, I use a ton of other indicators also. I have a bunch of other published indicators that are free that you can check out. I just typically show off the same ones. We're actually going to look at a couple other ones on the Bitcoin futures chart today. But I mean, you can go through and look at any of the ones you want that I have published. They're all awesome and easy to read. And, see what you like or whatever. But I mean, that one's great. It uses Bollinger Bands. It's just not really my style, man. I don't find that it's nearly as reliable as the other stuff that I use. It's not as useful for me. It's not as eye-pleasing. I don't know. I mean, it's just personal preference. That's all. But again, just because I don't show something off on the channel and on my TA doesn't mean I don't use it. I glance at a lot of different stuff. Like I have that indicator brought up on one of my other charts that I always look at. But I just use it typically different. Like in my opinion, if you're using Bollinger Bands, like if you're hovering at the bottom of the range of the Bollinger Bands, you're likely to get continuation to the downside. If you're hovering at the top of the range of the Bollinger Bands, you're likely to get continuation to the upside. But you're already going to know that because if you're using moving averages, if you're below all your moving averages, you're likely to find resistance to the upside and, continuation to the downside in the same way that if you're hovering at the top of the Bollinger Bands, you're likely to get continuation to the upside and, support, from the moving averages to the downside. So it's just telling you the same thing. And I just think it's less pleasing, like visually on the charts. So, but again, that's just my personal opinion. Anybody can do whatever they want, obviously. There's a million ways you can do anything. So, all right. So yeah, let's jump into, welcome to my regulars. Welcome to, a couple names I don't necessarily, recognize, but good to have you guys. Good to have, diversity from all over the world. As I know, a couple of you guys are here in the United States, but we've got, presence from Europe, everywhere, man. South Africa, all over the place. Let me know in the comments too, where you're at. Always glad to hear, how broad our audience is. I'm going to take a quick drink of water and then we'll jump into our cryptocurrencies. If you have any crypto requests, get them in now and I'll add them on. I've got Bitcoin Cash pulled up here as well for you. So we will take a look at that one. All right, so want to get started here with Bitcoin on the daily. All right, so exactly what we spoke about last week took place. Not only did we exit the bullish control zone, we now have the hard sell cross. We have the knife strengthening to the downside. The velocity or intensity of the knife is picking up. It's getting more strength, more momentum, more violent to the downside. So now, if we zoom in here as well, you'll notice that we were in a long trending uptrend based on the parabolic SAR, these green dots right here. And typically, when we're in an uptrend on the parabolic SAR, you can see this one went from 10,800 up to 19,000, 100% move. This one here flipped over from 17,700 all the way up. We got taken out slightly right here and then got a little continuation, but basically 17,000 to 32,000 or 40,000. So again, another 100% move. Okay. Next time we entered the green parabolic SAR was back here at 34,000. From that 34,000, our next move was up here to 57,000. Again, almost a 100% move, 75% or something. Our next parabolic SAR took out the bearish one and flipped over green again at 50,000. from 50,000, we made it up to 61,000. And now here we were speaking specifically about a push down to the 21. Down to the 21. And then also, are you guys still getting good connection there? It looks like it's kind of weakening on my end. I'm not sure if it's an issue yet, but we'll see. But anyway, so we took out that parabolic SAR, came down to the 21, did exactly what I said. We'd find support on the 21, but we'd take out the parabolic SAR, and then we needed to pay attention because we were probably close exactly at the 8 moving average, and now we're expecting us to continue here. So now we've entered a consolidation or bearish phase in the market cycle. Now, it doesn't mean that we have to like get a massive sell-off here, but, you know, I would expect us at least to come back down to that 55,250 range, or, you know, potentially back down to our 50-55 like we did here. Typically, when we get the parabolic SAR flips over here, the bullish range is about 100%, 75%, and to the upside. The bearish range, okay, cool. Thank you, brother. The bearish range, these last few times, you know, from the top right here to our bottom right here, roughly 30%. From the top right here, when we flipped over the parabolic SAR, to the bottom right here, roughly 25%. So are we going to do the exact same thing again? Are we going to get a 20% to 40% pullback? A 20% pullback is going to put us at 49,000 and at the 50-55. A 30% is going to put us at 43,000 and at the 89. And then a, you know, 40%, depending on how long it takes to get there, would put us at the 200 exponential and, you know, around like 30 to 35 range, 35, 36 range. So it's looking like there's a very likely potential that we're going to get a big or at least consolidation or pullback, you know, at this time. So that's what I'm paying close attention to. That's what I think is most likely to happen right now. So now, once again, we had a high right here and we put in a higher high right here. And here on our indicator oscillator, we had a high right here and we put in a much lower peak right here. So we have bearish divergence taking place. We are below the slope. The slope is blue. We crossed over. We're now below it. We have multiple histograms in a row. So I would expect this to flip over red. And every time that has happened previously, we got a massive sell-off, massive sell-off. I would expect a massive sell-off. So we have bearish divergence. Here again, we have a high on the indicator oscillator. We have a lower high on the indicator oscillator. Here we have a high on price action. We have a higher high on price action. So we have multiple indicator oscillators telling us that we have bearish divergence. We have left the bullish control zone, leave the red highlighted area, and we got the hard sell signal. Leave the red highlighted area, hard sell signal. Leave the red highlighted area, hard sell signal. So the same thing that happened the last two times, we got a 20+% pullback, 30+% pullback, actually the other way around. So I would expect at least a 20% pullback right here. That's what I'm expecting. So in my opinion, the next target is 49,000 to the downside, which at this point in time, you know, is basically like, you know, just from where we're at right now, which we're selling off again, you know, that's another 15%, 20% move to the downside. Seems very likely to me. Seems very likely to me. You know, we spoke about it ahead of time, specifically all this happening and what it was going to look like if it happened. And that's the beauty of this channel. You come and I tell you exactly what could happen, what's likely to happen before it happens. So you can be ahead of this. It's very easy for all these other channels, especially like all these like, you know, crypto and, you know, stock analysts to come on and say, okay, this is what happened and this is why it happened. Crypto had a sell-off, and this is why it had a sell-off. Crypto had a pump, and this is why it had a pump. Well, if you are so sure and your methods work, why don't you tell us about it before it happens? Why don't you tell us crypto's going to have a sell-off before it happens because of this? Because hindsight TA is easy. Anyone can do hindsight technical analysis. Anybody can say, oh, this happened, and this is why it happened afterwards. It takes actual skill and like practice to see what's going to potentially happen ahead of time, what's likely to happen ahead of time, and then project it in a clear and concise manner. And that's what's important, and that's what distinguishes an actual analyst and like a good analyst and someone that actually can functionally make money off of markets using technical analysis from, you know, just a fanboy that goes on Twitter, watches a couple things, they make sense in hindsight, and then tells you about them in hindsight. So pay attention to who's telling you about stuff ahead of time, potential moves and targets, and whose targets are getting hit ahead of time. So there's a little rant for you guys mid-video. You're welcome. I just see so many fakers out here, like so many frauds and so many phonies, and it just cracks me up. Okay, so we're talking about this same signal on the weekly now, you know, that we've been paying attention to. Inside the bullish control zone, at the top of a range, price is floating up while our indicator oscillator goes sideways or down, potentially maxing out right here. So we have a high right here in this area. We have a much higher high right here. Price is floating up. On our indicator oscillator, we have a high right here. We're losing momentum, selling off. We have gained momentum, but we gained it at a slower pace. So we have a much lower high right here, potentially going to cross back to the downside. This is that signal. This is the best possible signal ever in markets, in my opinion. This is the divergence signal on the jewel thief. You get a sell at the top of the range. That's what's likely to happen, but you stay inside that range. You then get a buy at the top of the range, telling you should buy. But why should you buy at the top of range? We didn't actually like sell off yet. We haven't like taken time to reset the momentum to where we could have fuel back in the tank. We didn't stop at the gas station yet to refuel. How are we all of a sudden, how is the gas tank on full again? So here we're on empty, saying we're running out of fuel, getting ready to go down. We need to go down and fuel back up so we can get more movement to the upside. So we're out of fuel, and then no, gas tank's full. Well, is the gas tank full or is our gas gauge broken? Because if this sells off right here and crosses back to the downside and then leaves the bullish control zone, leaves this red highlighted area, we're going to get the most reliable signal and my absolute favorite short signal, or if it's at the bottom of the range, opposite, my favorite long signal, which is the sell, the buy, and then the sell signal. That is the best signal. It's the same one that we got on Tesla at the bottom of the range before. We had this area is all green. The bears are in control. We get a buy at the bottom. Then we get a sell at the bottom. Then we get a buy at the bottom. So here at the bottom, we're saying we're all fueled up, ready to go. And then all of a sudden we get a, nope, we're out of gas. And you're like, yeah, but I just filled up on gas. Pull over to the gas station, try to fill it back up again. And it's like, no, it's already full. Your gas gauge is broken. You got all this fuel and you're ready to pump again. So that's what I like to see. This is like a perfect divergence signal in these markets. It's a huge fake out at the top of the range. So we need to be very careful here. This is exactly what we were talking about happening as well. You know, we ended the week with a green histogram, which is good. But now here we are, red histogram starting to form right here. So we talked about this, a bunch of green histograms in a row and then 2 reds. 3 greens in a row and then 1 red. So why did we all of a sudden get another red again? We're losing strength. And then again, 3 reds in a row, or greens in a row, and another red. So the last thing we want to see right now, we've got all week for this thing to push up to the upside and build strength. But if we don't, it's going to look like we're peaking out here. And then if we get 2 reds in a row, it's going to look like we're losing strength and getting ready to have a massive sell-off. We'll get the hard sell signal. And then I would expect at the minimum, test down to 50,000. But in all reality, we have not tested the 21 moving average since back here. We haven't tested the 21 moving average since 10,000. We constantly, in bull markets, Bitcoin tests the 21-week moving average. That would be at 38,000, 39,000, 42,000, depending how long we take to get there. That's also testing this previous high right here based on candle closes, 38,500. That seems very likely right now that we would test this, find support, not get a candle close below it, and then continuation to the upside. $38,000 is a phenomenal buying opportunity, in my opinion, and very, very likely to happen in the near future over the next month or two. Could it happen in a week? Yes. Could it happen in 3 months? Yes. Could it not happen at all? Yes. But I'm telling you, based on past experience and high likelihood probabilities in a bull run, let's look back here at our previous bull run up to $28,000. From when we break out from the all-time high right here, that's right here, we basically break above the all-time high right around this range, which is, it's about $1,000, $1,300 depending, $1,200 depending. After that, we retest the 21 moving average. We retest the 21 moving average and break down slightly below it. Then we get another parabolic run up. Then we come back down, we retest the 21 moving average on the weekly. Then we get another parabolic move back up. Then we retest the 21 moving average on the weekly. Another parabolic move up here, parabolic move, followed by, this is our top, obviously at 20,000, retest to 21, lose the slope and fail, and then we come back down to the 50, 55. Once we get the 821 cross to the downside at $10,000, we're obviously in a long bear market. You can see the parabolic SAR flips over and we get massive continuation to the downside, capitulation. So let's pay attention here to past history. What looks very likely to happen? We have now gone, since September last year without touching this 21 moving average. We've had a massive move up from the previous all-time high break. So it's very likely we're going to come back down here sometime in the near future and we're going to retest that 21 moving average. So is it likely we retest it and put in a higher low right here? So what we want to see for this to remain bullish and look bullish is for it to come back down and just close somewhere on the weekly higher than 38,500. That will look extremely bullish. A retest of this 21 week moving average, a strong rejection of lower prices, a big old wick off of it, nice powerful buys come in, everybody's scared, and then all of a sudden, boom, price just pumps back to the upside, and we've got massive potential for continuation. Nice 33% drop, everything's great. Could we get a wick down here lower? That's perfectly fine. We do not want to see a close below 38,500. We absolutely do not want to see a close at 32,000 or lower. If we see a close on the weekly at 32,000, I will get extremely bearish because I would expect a bounce back up and then this will look like a massive head and shoulders and the bull run's over. I don't think that's likely to happen. I think we're going to get down here to like 38, 39,000 and find strength and then see continuation. But we'll see what happens. Look back at this video in a couple weeks and see if I was right to the T exactly about this. I suspect I will be. Okay, what I want to pay attention to here now is on this daily, I want to talk about futures real quick and the weekend move, the easy move, the one I talk about every single week. Pay attention to where futures closes at, and then pay attention to what Bitcoin does while futures is closed, and then trade the move back to futures. So let's look what happened here. Futures closed. This is CME futures. This is this daily candle right now. This is where we closed. Depending on if you look at the close on the daily, which was 58,945, or if you look at it on the 4 hour, it closed at 58,425. So 58.4 to 58.9 is where it closed at. Okay. So now let's go back over to our traditional chart. So 58.4 to 58.9 is where it closed at. So what happened? That was basically the close right here on futures. That was the 14th. So what happened over, or no, wait, I'm sorry, it was over here, wasn't it? Yeah. So what happened over the weekend, over the last couple of days? We sold off violently from 58.9 down to 55,477. So that sold off into Saturday. And then what happened? We pumped straight back up to where we closed at 58.4, 58.5, somewhere around there today. So that was that Sunday trade. Took the buy off the 21 straight back up. So I actually was short through this area, shorted it down to the 21 like we talked about. I told you about that ahead of time. And then I took the long back off of, it was our long trending trade, long trending line right here. I don't know. I like all these different charts, and for whatever reason, this one is not updating. But this is basically, our long trending line, and then this is our shorter based on Wicks trend line. But you can see we like slightly violated it, came down here. Let me turn off the moving averages so it's a little more clear. I know a lot of people watch on their phones, so I try to keep this as clear as possible. But, oh, and we even talked about it specifically, the shorts that I took off these two ranges, took profits, took a third short right here off this range, took profits, entered a long. Actually, let me look at my other one and see where I entered the long at, so I'm not exaggerating. Entered the long off of 55,968, 56,000. So that was our 56,000 long right here. It was like 4 or 5% back up. We came back up to that long-term trend line, that purple one right here that we're paying attention to. Depending what time frame you look at that on the 4 hour, we violated it a couple times, but never like stayed below it. Here we have broken down below it, came back up. This was support, a key trending support line. And now we broke back up, pushed back up, and got rejected off of it. And now it's acting as resistance. So what we need to pay attention to is, now, have we gotten rejected by a key trend line that we've been following since January? Is this January trend line now rejecting us? And we're going to get continuation to the downside? Are we going to get the measured move of this pattern? You know, and it's not going to be a good one. We need to be careful, because we're basically inside of this ascending tightening wedge or range, and potentially looking to violate this now to the downside. And, you know, depending on how we want to do the measured move, if we just do a measured move of like the center of the pattern, like nothing too aggressive here, you know, we have a potential measured move now to the downside. I'm not even gonna mess with all these arrows and everything. TradingView changed how their arrow tool like works and everything. It's been like so annoying lately. But you know, that's going to give us a pushback down here to 40,000. What is 40,000? That's that previous peak top back here. That's our 38,000 roughly range right there. That's our previous, you know, support right here, or resistance. Turn support off of this dump right here, sell back down, potentially get support, get our measured move, hit our moving averages. You know, it looks very likely right now. You know, we got the hard sell on the daily, left the bullish control zone. We're below the slope, multiple histograms in a row. We've put in bearish divergence. We got bearish divergence on the weekly. I mean, this is looking very, very likely, you know, as at least a temporary topping pattern. So that's what I'm paying attention to. I'm going to see what happens here at the 21. We did get the hard, the flip on the parabolic SAR. You know, it's red now. We're expecting consolidation over the next, like, I would say at least 10 days. That was a 9-day consolidation right there. The one before that was 3, 6, 9, 12, 15, you know, 18 days right there. We got a short one right here, 4 days. We got a short one right there, 2 days. But I would expect probably at least a week of, you know, consolidation. We need to see what happens in price action in the meantime. And, you know, the key thing to pay attention to here on the short term, on the daily, is we put in a top right here, then we put in a bottom right here at 55,652. We bounce that up, and now we've put in another lower high. So we have a high, we have a low, we have a lower high. Do we come down here to 55,572 and get a daily close? Because if we close at or below this 21 moving average, it's going to look like we're at least in a temporary downtrend, temporary channel, temporary descending pattern. And I would expect us to take out this low and come down here to the 50-55, somewhere in that range. Find support on maybe like this previous little peak right here, this little area of support. But overall, it's going to look like we're headed back down here to like 40K. So again, it's too early to tell, but I'm paying close attention to it. And I think that that looks very likely. Dow futures 378 now. Yeah, and you'll notice too that a lot of times Bitcoin will lead futures. Like right before the futures market open for like a few hours, Bitcoin will do what the traditional markets are going to do. So everybody's like, it's a non-correlated asset. Bitcoin's a hedge against the system. Really? Why do they literally do the exact same thing at the exact same time? Like, it's absolutely ridiculous. It is nothing like gold at all, and it is 100% correlated. The futures markets and derivatives and, you know, all these like ETFs and everything are only going to further correlate this asset. It's a quote unquote new asset class, but it's traded inside of the traditional system. It basically, everything Bitcoin and crypto has become is the opposite of what it was meant to be. It was meant to be like a step away from the system and non-regulated and the people's money. And now it's none of those things. It's completely regulated. There's KYC on everything. It's traded on all exchanges. Every on-ramp and off-ramp is completely regulated. You know, it's directly correlated to the stock market. It's, you know, completely taxed, completely traced, completely regulated. It's everything it was not supposed to be. And then on top of that, like Bitcoin was supposed to be, you know, a way for people to interact with each other without like third party, like trusted people and like a payment method. And in fact, it's not a payment method. It's a quote unquote store of value. So everything it was supposed to be, it's not. So is it still successful? Yes. Is it still great? Yes. Do I still love crypto? Yes. But let's just be real here that crypto is nothing like what it was supposed to be. And, you know, if anything, it's failing to do what it was supposed to do. So, all right. So here I was talking about specifically a couple different indicators that I use, a couple of my proprietary ones. This is my version of the Fisher Transform. We have also the Stoch slope, which is like completely invented by me. And then we have the VPCI, which is the volume price confirmation indicator. I had these up on futures right here. This is another perfect example of divergence. We have a high here. We have a higher high here. We have a third higher high right here. We have a high here. We have a lower high right here. We have a third lower high right here. We are rolling over. Once this goes from like the light green to the dark green, we have peaked. Once it goes from light green to dark green, we have peaked. Once it goes from light green to dark green, we have peaked. We have triple divergence. Bearish triple divergence on the daily. Okay, now let's look at the Stoch slope. What this is it's the stochastics. The blue and red line is the stochastics. The white and yellow line are the RSI and the EMA of the RSI. Instead of having two separate stochastic lines, like the blue and the purple or whatever color you use, or no colors, it just has one line combined. And then once they cross, it turns the line, when they cross to the upside, it turns the line blue. When they cross to the downside, it turns the line red. This is just easy, simple, quick glance, and no BS, no confusion, just simple and easy. The RSI is in white right here. The EMA of the RSI is in yellow right here. When the EMA and the RSI are crossed to the upside, the white's above the yellow, we're bullish and moving up. When they cross to the downside, we're bearish and moving down. When they cross to the upside, we're bullish and moving up. So now we can look at the stochastics. We have 2, 3 peaks. We have a high, a lower high. We have another lower high, bearish divergence. We have on the RSI, a high, a lower high, a third lower high, bearish divergence. Same with the EMA of the RSI. So we have triple bearish divergence on the daily, on multiple indicator oscillators, on futures as well as spot markets. I'm saying we're probably topping out here, at least temporarily. Not financial advice. I'm not your financial advisor. Markets are extremely volatile. Please do your own research, trade responsibly. But good luck with $300,000 tomorrow. We're probably going to, 48,000 or something very soon. Probably going to be at 40,000 before long. Use technical analysis. Don't just believe these moon boys who every day they have a reason why we sold off after it happens. And every day they have a new reason why Bitcoin's going to $100 trillion and there's no more Bitcoin left. And everybody wants your Bitcoin and they're just trying to trick you to get your Bitcoin. Use the actual charts. Use technical analysis. People make money with technicals, trading, and they make money with fundamentals, investing. But no one makes any money making videos why we're bullish every day and why we're bearish every day after we get a move to the downside. No one makes money like that. VPCI, we had a very powerful VPCI move right here. And then since then, we've had weakness. We still floated up, but no real strength coming in. The slope is weak. We have no red dots. We have no strength coming in. Even when we broke from like key levels here, from that previous like 14,000 peak, we got like strong VPCI confirmation. Strong VPCI confirmation here. When we got like basically from, it was on that move basically from like 20,000 to 40,000. And then here since then, we have almost no VPCI strength confirmation. So need to be very careful here. It looks extremely toppy on multiple indicators and exchanges and not only futures, but also spot markets. So, all right, so let's run through some of our other cryptos here. I'm going to push BCH to the top of the list since you specifically asked for that one. So Bitcoin Cash on the daily. Man, I haven't charted this thing forever, so bear with me here. This is a super, super old chart, but obviously still extremely valid. So, all right. So this is an extremely old chart. This was a descending, tightening wedge, broke down from the wedge, started creating a, little wedge pattern, broke up, finally broke through our resistance, put in a, another series of lower highs since then, double topped right here, came down, found some support at this key resistance / support level down here. That was our bottom at 150. Since then, we found a bunch of resistance at the 300 level, broke through that, found resistance again at the exact level we would expect right here, which is like that 638 level. broke above it, failed to get any continuation, complete rejection, and now we're consolidating at that level. So I haven't drawn anything on here for a while, but we can now come in and, start looking at some important levels, some important ranges that are a little more relevant. So we have a strong trend line here developing since that bottom back there in March. Strong trend line on the daily here. So that's what we're expecting on the downside. And then since then, we basically have gotten from that bottom right here, depending how you want to look at this, I would say support right here, potential support right here. We went parabolic off of that long trending trade line. At which point in time, we, parabolic move, retest for support, parabolic move, new high, retest for support, fail, retest as resistance, retest as resistance, series of lower highs. We have a high, we have a lower high, we have a low. I would expect us to come down here and put in a lower low, somewhere in this range right here, 397, 400. I would expect us to find support somewhere along this white trending line right here. So, depending if we just dump massively today, 329 to like 380, somewhere around that range, we could easily come back down here to this key range at 300. But I would think probably somewhere around like 350 is most likely to happen, because we have quite a bit of support in this range at 350, 350, 350, 350, support around like 370 right here. So, and that's going to come into line with this. So if I was looking to buy this, which I never would ever in a million years, I would never ever buy this. I would literally buy anything before I would buy this, just because of all the FUD that's happened with this, Roger Ver, all the just trash that's happened with Bitcoin Cash. I would try to buy it in that range right there, if I was going to trade this. But let's just pay attention to something key here. We topped this out at like $4,000 in the previous bull run. We have not even come close to making a new all-time high on this. So this is extremely bearish. This is one of those cryptos that may never make a new all-time high. If we do break back above and consolidate above 636, my next target would be like 1770, but it's impossible for me to get even remotely bullish on this thing. You could argue that I'm wrong, and if you just absolutely love this thing and you just love Roger Ver and you think he's just a great man and this has just tons of potential, you could argue that we're in an uptrend. We've got basically a tightening, ascending wedge taking place right now. That was our all-time low, or like low of this cycle, and then we put in a high right here, put in a higher low, and then we put in another higher low right here, and this is just a part of that move. What you would expect to happen is just another higher low, like right around that range I talked about, 350. But I mean, let's be real here. Are you ready to just stomach another 32% drop on something that may die? And again, I don't mean to be overly bearish on this, but I lost all respect for Roger Ver. Any respect I had left for Roger Ver when him and Craig Wright got into that circle jerk back in 20 whatever it was, 18, right before the capitulation from 6,000 to 3,000. It was basically just the most pathetic thing I've ever seen, and just he'll never recover in my eyes. So that's what I look at for Bitcoin Cash. But to me, this is a dead asset. Until it takes out its all-time high, which, oh, whoops, it's not what I meant to do. This just looks like a bullish retracement of a bearish dump to me. Let's look at some fib levels. I'm going to brighten these up a little bit for you. Get a little clearer of a picture here. Let's switch it to orange. Hopefully that shows up decent for you. The top of the range back here, 618, would be right at 850. It's possible we push back up and get that. But as far as I'm concerned, we broke down from this parabolic trend line. So I would think it's more like, and look, the 382 comes in exactly where we've got our little green box right here. So, and we're getting rejected directly at the 0.5. So I think that's the most likely thing to happen. From there, if you want to take a long position, I think you could take a respectable long from this area back to the 618 and you know, with confidence, I think. Dear God. Oh, I know. So annoying. All right. So anyway, so you could take a respectable long position if you wanted off of the 382 right there, you know, with your stop loss below the 382. I would not go down to the 236. I would say somewhere below like this key level. But I mean, you're looking at like a 25% potential to the downside for 133% to the upside. So I would rather wait for this to build momentum and find support off this range and then get back into it with the potential move back up to the 618. I mean, risk reward, this isn't bad, but I'm never going to take a 25% stop loss on something. Like, I mean, so you're better off just buying into momentum. When you start finding support or whatever, or start getting that move back up, I would take a tight stop loss into a momentum trade back to the upside. But this thing looks, to me, it looks like it has more potential to the downside now than it does to the upside. But there's no real trade to be had here, because even if you wanted to take a short in the meantime, and you want to like take a short out of this range, you know, if we get back down to the target right here, you're looking at 32% to the downside, and you're potentially going to get stopped out of your trade if you take out like this area right here, which is like 20 something percent to the upside. So there's no trade really to be had here. The trade was off of like this resistance area, or like, I don't know, there's just not really anything good here in my opinion. The next key trade you'll have on this will be a long off that level, you know, and then if it starts breaking down from this white parabolic trend line right here, I would start getting scared. You could even argue that the trend line you'd really be looking for would be this blue one off of the bottom, and then like this here. So, you know, if you wanted to look for something a little more realistic, I would say probably move your box down slightly and look for your buy. You know, look for buys somewhere in this range. Again, this is not financial advice. 362 to 300, 290. Start laddering in that area. You know, maybe like move this bad boy somewhere around there. Put in like a 13% stop loss. You know, ladder your buys, have like 3 separate areas to buy. If I was going to enter a trade on this, that's what I would do. And then I would just have one slightly lower and maybe one slightly higher. So one at the top of the box, one at the bottom of the box, and then my stop loss somewhere around like 12 to 15% to the downside. Because that's like a 10 to 1 trade. Like, that's not a bad trade. There's enough confluence on support right here that a 10 to 1 trade with a likely reversion to the top side of the range off of what is, you know, essentially like a bullish consolidation or retracement of the bearish move, I think you're likely to get back up to the 6.8, but I think you're more likely to come back down to the 382 first. So that's what I would be looking for. I'd look for a long, like a 10 to 1 risk reward. Shit, to tell you the truth, if it gets back down there, I probably will take this trade, just because it looks good. You know, but again, Bitcoin Cash is garbage. Bitcoin trash. BCH. I don't know why you like it. No offense. But to each his own. All right, let's jump over to Polkadot. Dotted dot dot. Doing exactly what we spoke about before. We topped out back here, you know, very clearly. It's basically just operating inside of a triangle. It's hard to chart this thing because it got that sick cracking wick. That cracking wick that'll make you go, whoa. But, you know, basically got a little triangle forming right here. Bottom. God, this tool is annoying me right now. Bottom and top right there. Let's see if we just kind of move it off the screen. There you go. We got like basically a little triangle action here. Bottom of the range. Multiple touches. We're basically at it right now. So, you know, this is our support area right here. And the 21. We want to see it move back up, but if it does, target to the upside, it's probably like $38. I think it's more likely at this point in time, you know, based on what Bitcoin's chart looks like, based on what everything looks like. We have a ton of red, like histograms. We're below the slope line. It's clearly red. All the momentum is to the downside right now. I think it's very likely that we would get like essentially like the measured move. I think it's very likely we would get the measured move basically of the pattern. This is a conservative measured move break of this pattern. And that would take us back down to the 89, roughly 25.92. I don't think it's unrealistic that this thing goes down, 20%. Actually, that'd be more. But back down to like $30. I think that's a pretty safe bet, 25%. And then I would look for, a potential long. I'd like this. I like that long term. I think it's got a lot of potential. Long term, I think this has definitely got some potential to it. And I think you could look for essentially like at least, I mean, this is just a nice, easy, if it gets back down here to this range, 7.5% stop loss, 15%, to the upside, that would be an entry at 26.29 off of the measure move, off of the 89. If you wanted to get a little greedy on this or just wait to see how it pans out, if you were expecting it even to just come back up and retest the 21 and get rejected, I mean, that's 35% to the upside, 7% to the downside. That's 5-1. I'll take that trade all day. That looks good to me. If it gets there. Dogecoin, same thing. Just, once we got rejected right here at that key level, we were expecting 62 cents. We're just expecting to put in a series of lows. Our support at this point in time, where we're expecting to come back down to, is that 236. And eventually I think it's going to break. I think it's going to break that 236. It's going to look like a massive descending triangle. It's basically, we've been talking about this though. This is no secret. We got basically a series of lower highs and a flat line support here at the bottom at the 236 at 48 cents. So I think it's likely we're about to sell off from 57 cents, lose the 821 to the downside, and get a retest of the 55 exponential right here. I think 48 cents. Now, do you want to buy that and hope for another bounce back up to where we're at right now? Probably not. You could if you wanted to, but I'm not really interested in this thing just because the downside risk is so massive on this. Because if we do break this descending triangle to the downside, if we break off that 236, we spoke about this before. This thing is scary as hell. That's a daily candle, with no support and almost no price action below 2.8 cents. So, these are our targets down here, 32 cents roughly, 17 cents roughly, and a penny. So at a penny, I'll be interested in this. I think at a penny, it'll be worth something again. You could definitely get a bounce off 1.7 cents. You could potentially get a bounce. I think I said 17 cents, but I meant 1.7 and 3.2. I think you'll get a bounce off of each one of these key fib levels and each one of these buy areas. But you got to be careful with this thing because it looks like it's going to be at a penny again here when this cycle ends. All right, chain link, linky dinky, stinky linky. This thing has looked bearish. Put in a high, lower high, lower high. All these charts look the same, obviously. Damn it. This thing's psyching me out every time. From our high right here, what are we doing? Putting in, you could say it's a descending triangle. And that's what's likely going to happen based on this low and that low. And, we're back at the low again. But I think it's more likely that this is a fake out. People are going to get like bearish on this thing if it breaks down from here. And then I think what's more than likely going to happen is I think we're going to get, a descending triangle, flat bottom support. We have two pretty nice support points right here, but you really would want to argue that this is our support, but I don't like it. I think this is more like just a temporary support with a reaction rally off the 55 exponential right here, and then we're going to come back down. So I think this is a buy at $25 for a move back up to the top of the range at 29. That's it's got decent upside potential here. If we break down too far from here, depending what you want to do with the stop loss, again, I'm not going to put like a 10% stop loss in. I would rather just ladder into trades. But if you throw like 7.5% stop loss with, you know, potentially like 18 to 20% to the upside, you got a 3-to-1 off that bottom support, flatline support area, you know, which comes in line with like this support area here, resistance area here, support area here. You know, I think this is more likely than not what's going to happen. If we break down from this range, you're probably going to get like that Kraken wick move right there, which we like technically already got on Kraken. But I think you'll see like, I think you'll see it hold if we break down from this range. You know, I think it's more than likely going back down to like 15 bucks. Again, don't get too bearish on this thing though. Could break to the upside, but I would want to see a break, consolidation, and continuation. I want to see it break out, retest this trend line for support, and then get continuation. Uniswap, Uni, this one looks more bullish, you know, because it put in like a high here, put in a high here, put in another high here, but it put in a lower high here, but then broke above that lower high. But it really needs to take out the macro high here to be like actually bullish. It really needs to get above that area before you can get bullish on it. Because at this point in time, it just looks like you're getting rejected off that same spot again. And again, you can argue, you know, that we basically have like an ascending triangle here or a bull flag or something to that effect. You know, depending how you want to look at this, you just got to be careful because even though it's showing strength, it could just as easily just wait, and it's just going to do what Bitcoin does. It's just going to do what the big boys do. But, you know, a breakdown from here, I would look for price action around like 28 bucks. But just got to watch this thing. It's got key support resistance areas in here at like the 89 at like 20 bucks. But same thing, it's losing momentum, slope to the downside, hard sell out of the bullish control zone. I mean, this thing has been a sell. This red line has been a sell the last 1, 2, 3, 4, 5, 6 times we touched it. So, and the buy has really just been like, you know, 1 time here, 2 times here, 2 times here. So do you really want to take a buy off this range again? I mean, there's just so little meat left on the bone. I'd want to wait and see on this guy. Ethereum still looks shitty. It looks like it's rolling over, getting ready to die. Put in a lower high. Got the cross here to the downside, saved it. Got the cross back to the upside. We're now at the 21 again. Getting ready to cross over the 821. Parabolic SAR is getting ready to be taken out. We're at the parabolic SAR right now, about to take it out. If we do, 1625. Everybody's talking about $20,000 Ethereum. Come on, man. We can't even get above 2,000. Once we get above 2,000 on a daily close, you talk to me and I'll start giving you targets to the upside. Until then, we got a rejection here. We've got a negative slope. We have another rejection off the slope line. One of the most reliable rejections. We got a hard sell at the top right here. Played out perfectly. Massive sell off. We got a hard sell right here. Getting ready to lose the 821 again. So, you know, the short on Ethereum right now looks pretty juicy. 17% to the downside. I don't see a real upside trade on Ethereum right now. I see a downside trade. You know, you got potential like 7% downside or a stop loss on a short, 7% down. There's not really a great trade right here. I mean, realistically, the trade is like 7% stop loss to the upside, or realistically like, you know, 11% to the upside with like 18% to the downside. You should have already been in your short off the 886 right now or the 786. There's not a great position here. I would probably have to look for either a momentum short or just run like a 6 to 7% stop loss with the 18%. That's not a bad trade right there. That's 3-to-1. You know, I would rather buy it off the rejection. One of these sell it off one of these rejections or the hard sell, but you know, it'd start looking bullish again if you got back up here above the 786, tempted the 886, it'll start looking bullish and you could look at that upside potential, but it looks like shit. BAT, one of the most bullish cryptos out there right now, in my opinion. High, high. Did exactly what I said. Sold off of the high right here. I took the long again off the 8. Exactly where I told you guys I was taking the long. I think I started laddering in at like $1.10. But I got a couple of buys in right here off the 8. Still looking bullish. 8 and 21. Still powerfully to the upside. We did get the hard sell signal. Getting ready to get the cross back to the upside potentially. Got to pay attention to this. Make sure we don't get a rejection. But, you know, we got 2 red histograms. Starting to look a little shaky, but we're still well above the slope line. It's still blue. We're in a powerful, powerful uptrend. You know, I was telling you guys about BAT back at 25 cents. If you got in it with me, great job. Highly recommend it. Oh, here's another one of our beautiful signals right here that I'm always talking about. The divergence signal right here. Hard buy, hard sell, hard buy. That's the divergence signal right there. We sold off into support in an uptrend. Get the hard sell after a massive sell. That's one of the best things. And that's the opposite of what Bitcoin's doing right now. So this is the signature I love. That's a perfect example on BAT, followed by from that hard sell signal, you know, to where we're at right now. That's a 400% move. So anybody that's in that trade with me, great job. Welcome to the game. Congratulations on your gains. This was great too because it waited till after everything else to break out. So it was still so cheap for so long. Nobody was paying attention. And fundamentally and technically, it's one of the best cryptos there is in my opinion. So if you're not using Brave browser, use Brave browser. If you're not using my indicators, oscillators, they're all free. They're in the description. Check them out. I'm going to do Riot and then MicroStrategy, and then I'm going to take a quick break and I'll interact with chat a little bit. And appreciate everybody that's hanging in there. All right, so Riot did exactly what we said. Sold off at the 786, came back down, found some strength, but it looks like it's getting ready to just roll over. We're back inside the bullish control zone. That's good. We are slightly above the blue slope line, but looks bearish. We could find support here and move up to the upside, but if markets are selling off, I would expect this thing to follow. So very careful on this one. This is crypto mining company. It's going to do what crypto / stock market does since they're just one now. MicroStrategy, you guys know how I feel about this. Time to get bearish was up here. Time to get bullish was down here. Right now, it's just putting in a series of lower highs. So if we take out this 0.5 at 812 on a daily candle close, it's got some potential. But to me, this looks like a bearish reset. It looks like we sold off massively and this thing died. Michael Saylor probably came in and tried to prop it back up, and he's failing miserable. Meanwhile, the indicator oscillator is moving back to the top of the range, but price action's going sideways. And then very, very soon, it's going to just roll over and die again. Next target to the downside, 382, $468. Looks very likely. Very likely. This thing looks like death. It's probably one of the worst looking stocks in existence at this point in time. Looks absolutely horrible. You know, 16% to the upside, 40% to the downside. That's what it looks like. Because like potential target to the upside 382. But in all reality, if it comes above that 0.5, I'd probably get out. So you could run an 8% stop on this with a 40% to the downside. That's a 5x, 5 to 1. 5 to 1 risk reward. Looks real good and real reliable right now. This thing is dead. All the Bitcoin buys in the world can't prop MicroStrategy back up. It lost its momentum. It's a garbage stock. You know, its value is somewhere in between $100 and all the Bitcoin it owns, price divided by, you know, its shares. It's just a Bitcoin ETF at this point in time, and it was way overvalued. The premium on the Bitcoin you were buying inside of this thing was massive. So until it comes back down to like level out, it's just going to continue to die. It's in a clear downtrend. Looks horrible. Fundamentally and technically, looks horrible. So I'm going to take a quick break, grab a drink, use the restroom, and I will be back shortly. And we are going to go to traditional assets. We're going to go back over to silver, gold, basically commodities. Check them out shortly. So I'll be back in probably a minute or two. All right, back in action. Oh, my bad. I didn't mean to skip you there too. I know you asked for LTO. Let me throw that up here real quick. So that's our monthly. Obviously in a powerful uptrend. I don't know how far this goes back. This is just calculated by TradingView on Binance. All-time high. Powerful uptrend. Looks good on the weekly. We can put in a fib extension target on this from that high to that low. Man, this is the danger zone. We are at the 1.618, slightly above it. This is typically where you see stuff top out, right at the 1.618. We could continue on up and start hitting our next targets. 1.786 is our next one here at 0.77, 77 cents. But I have to see on this, man. Looks fairly toppy. Still above all the moving averages. Holding pretty strong. Not showing any like massive divergence or anything. Doesn't look bad overall. You know, it's basically like, if I'm not mistaken, at least based on this chart, it's blue sky breakout. So I would expect it to just continue on up, you know, until it starts showing some kind of signs of weakness. But, you know, key fib levels or targets to at least like start paying attention. You know, we're at one right now. So, but, you know, you got a powerful trend line way, way, way below you right now. You know, and depending what you're looking at, that green one there. Let me know you guys can still hear me coming through clear and everything. Looks like we're getting a good connection, but it warned me again about like the bit rate. This is basically what we're paying attention to. Something like that. This is what I would be looking at. This trend line right here. You know, basically from December at 10 cents. We touched it again in February at 20 cents. We broke down from it, but found support right here at 30 cents. Every 10 cents, 10, 20, 30. So and then, you know, here was probably 40. Yeah, touch it again basically at 40 cents right here. So, you know, where we're at right now, I would look for this. If we violate that trend line, I would get worried. And then if we did, I would expect it to retest the 618. If we break down below the 618, we'll probably consolidate right here and then break down to like the 1.618. We'll break down to the 1.5, retest it, and then if it finds resistance, then I would expect somewhere along this like 30-cent range, you know, and that next parabolic trend line. But as far as I'm concerned right now, it's full on parabolic, in an uptrend, making all-time highs or at least regular highs. But this is the danger zone. I'd be looking to put a stop loss in here, at least a trailing stop, or take some profits off the table. But I mean, you're very likely to get a good re-entry into this thing in the near future if it does sell off. Oh, appreciate that, brother. So yeah, that's LTO. What is that? LTO. I can't think of what it is off the top of my head. What's the full name of that one, if you don't mind? Drop that bomb on me. In the meantime, I'm going to jump over to gold, and we'll start taking a look at some of these things. So once again, gold just oscillating between the 8 and 21. Showing some weakness, man. Still right at that exact area we're expecting it to. It's got like a bearish engulfing candle coming in, opened higher, and just bearishly engulfed back down to 1735. It's pretty much untradeable right now, though. You could argue we're finding some support that we broke through this red descending trend line. Finding some support right here. Finding some support off the moving average, 377 after we bounce to 528. Could we confirm a breakout here? Yeah. If we did, take us back up to like 1800, top of the range. I think it's more likely we would get rejected and come back down to the bottom of the range, but you could argue, I mean, we are technically above the 377. We're right at or above the 8 moving average. We're at or above the heart line. We're at or above like the confirmed breakout area. So gold's starting to look a little better, but I'd be careful because, you know, the oscillator indicators are moving up and price action is not moving up that far. So I think this channel lasts until it doesn't. Still looks bearish to me, but we hit our measure move. I mean, we got all the downside we need out of this. LTO network, that's what it's called? Okay. I don't know. I didn't know if there was like a full name to it. It sounds familiar, but I can't think of it off the top of my head. Silver. Check out the silver. Again, silver looks like stronger than gold, but it looks shitty. This is a big bearish candle coming in. I mean, it was starting to look decent at 26.23. We're down now 25.76. Bearish engulfing candle. You know, taking out basically the last like week's worth of price action. I think it's going to come back down here. I still think it's going back down. You know, 25 could hold, but I think 24 and some change is more likely. I still think the bottom of the range is what's going to happen. You know, measure move from the breakdown of that pattern is 23 bucks. So I would expect some support in the low 24s to the mid 22s. But it's not doing anything. Premiums are slowly coming down. They were like a little under $5 now after reaching like $7 and $8, like 12 on Eagles. I think Eagles are down to like $9 now, and just regular old bars or rounds were about like $4.50. So premiums are coming down. The old shortage on silver is starting to evaporate. I mean, I'm still bullish on it long term. Bullish on gold, silver, all commodities basically, but this whole squeeze, it's the same as the Bitcoin thing. There's no more Bitcoin. You better get it while you can. There's not going to be any Bitcoin. Oh, you're going to miss your chance. Never below 50,000. It's going to 300,000. It's not in the charts. The charts are telling us none of that. Same with silver. Silver's going to be $100 tomorrow. Silver's in like a 40-year holding pattern, so I wouldn't expect anything too soon here. Now, is there potential in the next couple of years for us to break out of key areas and have massive moves to the upside? For sure, but we're not just going to run out of silver tomorrow. We'll see what happens. All right, so UEC, Uranium Energy Corp, after that massive sell-off, found support exactly where we said at that 8. We could still come back down to the 21, back down to like 250, or like even as low as like $2 back in there, but it's holding pretty strong. A couple red histograms, you know, still in a powerful uptrend. I think this will probably be a buy area. We'll see what these look like. If we get a couple more rejections to the downside, a couple nice wicks to the downside, and then continuation will look good. If we start consolidating under or at the 8, I would expect to move to the 21 or lower. Overall, still looks good though. Excuse me. First Majestic, spoken about this quite a bit. It's basically just found support at the 8 and consolidating. It's rejecting higher prices though. I think it's going to come back down to this 1440 range. I'm definitely a buyer down there. That's what I'm looking for. You know, we just tried to save the 821 cross, but we're not really able to. We have a pretty strong parabolic move to the downside. The PSAR is hitting us pretty hard. I think we come back down at least to the binary pivots in the 89 at like $15. And then we'll have to see what happens then. But, I mean, the truth is, if we come down there, I really don't have to draw it in because I have already the, you know, this is just looking like a big old descending triangle. You know, red is our resistance. We're getting lower highs. Blue is the support. We have the same low each time. I think we're about to sell back down to like $15. And then if we break down from there, it's going to look bad. Could we break to the upside? Yeah, but this is a bearish pattern. It tends to favor a break down. I don't think it'll get the full measured move here, but I mean, that measured move is like massive. Measured move is back down 675. That's really crazy too, because we spoke about this in the last video. We have this huge pattern right here. this gigantic wedge, this triangle going back to 2004 or 2008. I'm sorry, goes back to 2008. It's been very, very respected. We broke out of it here, this year in January on that like silver squeeze. I would want to see, if we break down from this area, I would want to see the 618 hold this support at like 1320. If we don't, if this does not hold this support, I think we'll get the measured move and we'll come back down to the bottom of the triangle, which is like 680. But, that's going to mean silver price is getting wrecked or something fundamentally goes wrong with this thing. I still think we're in a 1, 2, 3, 4 back down here. Retest, find support at the top of that breakout, and then get continuation with massive upside potential. Caterpillar showing weakness, just like we said. Fundamentally looks good still, but we broke through this range, coming back down to test that support. If this doesn't hold right here, it's going to start looking bad, like short term. 223, right where we're at, basically. I would expect us to come down to like 219, or at least like retrace to like 205, potentially even lower. I would think like 200 to 205 is probably where it'll start getting bought up, but we got some decent fib levels in here. The 1236 fib extension is 204. We could come all the way back down to that previous high breakout, 175. I don't know if it'll happen, but I mean, this is a pretty massive move up here. So, if you're going from the bottom to the top, is it possible that we topped out right here and we're going to see a big pullback? I mean, that 236 looks likely, 189. The 382 comes in line almost with that top. I mean, 163. This thing hasn't moved a ton though. So, even if we did get down to one of those levels, 20% to 30%, I mean, tech already got wrecked worse than that. So, but fundamentally very bullish on Caterpillar. Still making all-time highs. No resistance above it. I think it's more likely it has like, a little consolidation right here and then continuation to the upside. ACB, Aurora, cannabis sector. This thing has slope angle to the downside on both the 200 exponential and simple. Looks like a failed breakout into a bull market, but could easily rally back above. Really needs to get above 1275 right now, or it's going to look bad. But I still think our target to the downside is more likely. I'm looking at the 618, and that was what we talked about last video. This would look phenomenal. I mean, if you're already in this, it sucks. But, we put in a left shoulder down here at $5, put in a neckline at 20, put in a head at 360, put in a neckline at 20, 19. If we get down here to that 618 at 675, $7, I'm buyer on this all day. It's going to look real good. Whoops. Going to look real good for a potential move back up to the neckline at like 1850. It's slightly sloped to the downside, but the measure move on that is like $33. So if we can get this bad boy at like $7 up to 33, I mean, let's go. And I'm fundamentally bullish on commodities right now. But even if we just come back up to the neckline, with a moderate, like, 27% to the downside, 165% to the upside, just to the neckline. But, I mean, it's going to look like a confirmed head and shoulders at that point in time. So, I mean, look at that. I mean, obviously you don't want to take a massive risk-reward ratio like that, massive drawdown like that, 27%. I'd be probably laddering in as long as we get lower or higher low. But 27% to the downside for 377% to the upside. Risk-reward ratio, 14x, 14 times your money. Looks pretty good to me. It's not financial advice. I'm not your financial advisor. Markets are extremely volatile. Please do your own research, trade responsibly. But damn, has that got some potential. Don't get me started on it if it gets back to all-time highs. So Tilray did exactly what we said. After it topped out right here, failed to get back above the 528 moving average. It's crossing the 821 back to the downside. It's just a rejection, lower high. I'm still massively bullish on this thing. But again, I'm looking for it to at least get down to the 200 moving average and the 0.5, 1750 to like 1250, somewhere in that range. And then this looks like a massive, 5 5-wave structure. 1, 2, 3, 4, and then the 5 back up. You know, if we get back to all-time highs even, that's huge. But I mean, this thing's one of the most bullish of the cannabis sector, I would say, at least in my opinion. Does it get there? I mean, I don't know, but I would say probably. I mean, especially just with everything fundamentally going on. These cannabis stocks went into like a bear market way before the actual stock market did too. Let's look at this one, risk reward. You know, 30%, if you were buying in here at like 15 bucks, a 30% move down would be like as low as $5. But I mean, I'd be a buyer through that range from 15 to 5. I'd be laddering into buys with a minimum potential back to like the 886 or at least like, let's say the 786 just for moderately. 603%. I mean, would you risk a 30% drawdown for 600% to the upside as a moderate target? I mean, that's a 20 to 1 risk reward ratio. And in all reality, my actual target on this bad boy, and these are my trades and potential entries. I wouldn't take these if I were you. You'll lose all your money. You'll end up living in a van down by the river. I mean, 1800%, you know, moderate on that one. That's a like realistic potential trade too. This is like bam down by the river or retired. Those are your two options. And then, you know, potentially if we do hit the Fibonacci extension, I mean 6,737%. That's like a 212 to 1 risk reward. I'll probably throw a little something at that. I think that looks pretty good. But again, don't get too excited now. Anything could happen. This whole thing could get violated. It could get absolutely crushed. But that's what I'm looking for. Tilray looks good to me. Fundamentally and technically, it looks good to me. The actual chart, not technically as much. But, I mean, overall, I think it does. We've entered an uptrend. We're above the 200 exponential, above the 200 simple. You know, we've got all the positive crosses to the upside. I think we're just going into like a little 3-wave retracement. But, I mean, we said that at the 3 when we were topping out. I took profits a little too soon, but I wasn't expecting that crazy parabolic like little jump. But I still got out way before that red massive dump. So lemonade. I mean, this is trash. I mean, poor Meat Kevin subscribers. He was like shilling this thing bad. And then it lost 57% of its value. But, you know, it came back down to that little high right here from the IPO. It's a key support area. If this holds right here, it'll look decent. If it doesn't hold, it's going to die. If it doesn't hold, it's going back down to like 67 bucks or zero even. If it does hold, I would expect like that was basically a 1. I mean, I don't even know. It's hard to tell from like the IPO. Man, I mean, this thing, I already got a fib on there. I didn't even realize. I mean, it already made it back down to the 0.5. The 618 is like right here at 76 bucks. If this holds right here, this area holds, I would think the real trade is to the upside on this at like 132, 32% move to the upside. If this holds, but I mean, if it doesn't, it's going to look real bad real quick. But that's what I'd be paying attention to. Does this area right here hold? If it gets below that 0.5 though, if it drops below 90 bucks on a daily close, if it takes out this low right here at 87 on the daily close, 76 is going to look real likely, but this thing could get real bad real quick. I mean, it already has, but it could get worse. But I think where it's at right now, it's pretty decent support. So hopefully it finds a little strength and moves up if you're in this bad boy. LTO, oh, we already looked at that one for you. Okay, so yeah, that was our commodities. Anybody got any commodities they want to take a look at? Any more requests? I think we pretty much knocked out everything. Oh, we still got tech to do. Don't mind me munching on some fruit. So Tesla, overall, nice uptrend. Lost 821 cross back here. You know, well in advance. We told you about that. 822. It's below 700. Trying to find some strength. Got rejected off the 21. Could not cross the 821 to the upside. Looks bearish. 536. Coming back down to retest those lows. We'll see if it holds. I think it's going to hit the 200 exponential simple, and then we got to see what kind of bounce we get off of it. But we got to bounce like pre-run, front run of it. Queen Kathy tried to save it, but much to the dismay of all of her funds, which are like loaded on Tesla, much to the dismay of her cult, it's not looking good. It's not holding. All the moving averages are curving to the downside. We have lost all the moving averages. 50, 55, 21. The 89 has a negative slope. We're below all of them. The only thing left to save us now is 200 exponential, 200 simple. So I think $500. I'll see you at 500. Looks very likely. I know Meek Kevin was like bragging about how much money he had in Tesla and how big his portfolio was. He should do an updated version now that Lemonade and Tesla and all them like sold off like 40-50%. I want to see his I want to see his portfolio now. I noticed he hasn't been talking about it as much lately. Poor guy. Neo. Same thing. Looks like Tesla. It bounced to 200 exponential. Looks like it's coming back down to 200 simple. $32 looks likely. It's getting rejected below the 8. Looks bearish. Man, everything looks bearish. These markets look like shit. Alibaba broke down well below the 200 exponential and 200 simple. I mean, this is our resistance to the top here. It looks like we just topped out the 3 and we're coming back down, but we basically already retested the top of the 1 already with that sell-off. So I want to see this thing start holding. I want to see this start finding some strength, because if it doesn't, it's going to look bad. I mean, but it looks like we basically have an ascending trend line, support, and then we have a shorter term descending trend line resistance. So I'd like to see it basically bounce this support line now. Find some support, come back up. I think it could come all the way back up to like 255, but we just need to see which one of these breaks first, because it's going to be a powerful move, whatever direction it breaks in. It's going to be a powerful move. But, you know, this is like basically the hard buy area off the 0.5. If it gets down any lower, it's going to violate the Elliott wave structure. We'll have to reevaluate. Zoom, zoom. Again, below the 200 exponential and simple. Exponential has already lost a slope. It's below every one of its moving averages. Next target, 377, $258. Looks like trash. I mean, long term and fundamentally, it's good, but I think it lost a lot of steam on the reopening trade. But I mean, I don't think Zoom's just going to die and go away. I think there's a secular shift in technology and the way that the workplace operates. So I think long term, Zoom's going to be good and has potential. I think people are going to be video conferencing forever. But it looks like it still has more downside potential. A lot. I mean, it's consolidating at its low. But last time it did that, last time it broke down to a low, broke down from it, found support, and got a decent bounce. Here we're at a new low. We're at that same new low again. So we could find support and just put in a lower high. But, you know, we're just operating inside this channel. So, you know, until we break above 400, it's more likely going down to like 272. So, again, looking bearish. Man, these markets. I know people are like super bullish on the markets right now, talking about all these buying opportunities. Everything looks bad to me. And if you disagree, I'd love to hear why. PayPal. Looks like shit. Below the 821 cross. Barely hanging on to the 89. Negative slope on all the moving averages above it. coming back down to 200 exponential simple. $211. Maybe fib it at 382. It's gonna, the 382 Fibonacci is coming in line with the 377. So 187. Looks bearish. Apple got a massive rejection. We were talking about this specifically. Looked like it got a breakout, but was the breakout going to hold? No, it's getting dumped on. Didn't quite make it to the 200 exponential and simple. Got rejected. Could not get back up. Could not get the 821 cross. It broke out of, let's look at this channel right here. This is exactly what I said was going to happen, just like what happened with gold. We were in this channel. We broke out from the channel, and I said, let's wait for the retest to see if we can get a measured move. If it sells back down and finds support at the top of the channel, then we can expect to get continuation. I'll take a buy into momentum. Failed to happen. Massive bearish candle. Sold off violently. Got rejected again off the trend line. It's coming down. It's coming back down to retest 116. It's coming back down to the 0.5 and the heart line at 113. Or it's coming all the way back down to the bottom of the channel and the 618 at 107. Bearish. Looks like shit. All these markets look absolutely terrible right now. There are very few stocks, very few cryptos, very few assets overall that look good right now. Pinterest. Pinterest got a nice little bounce off the 89. It got above the 8, but it's still below the 21. Let's see how tomorrow goes on this thing. If it bounces back up and can consolidate in like the 75 range, and it'll be back above all its moving averages, this could look bullish. So we do have one that looks decent finally. If it gets rejected here again, though, and starts to sell off, I think it's going to retest this low, 62, and then next target 57. But we got to be careful with this one. It looks better than a lot of the other stuff, but again, does not look good. Semiconductors, 821 cross, tried to save it, failed. Same thing. Fundamentally look good, but you know the supply is not there to meet the demand. And this is going to hurt a lot of stuff because it's like basically a bottleneck in the tech sector. Really, it's bottleneck in everything. Computers, cars, you know, anything you can imagine that needs semiconductors is screwed by the shortage. And we get most of these from like China and Taiwan and all that. We have very few coming from the United States. So globally, most people are getting these from a limited number of places. Crypto mining needs semiconductors, need for video cards and everything. So, you know, it's hard for anything to grow that relies on these or build or manufacture or sell because there isn't any right now. So we'll see. You know, it's trying to save the 821 cross. Still looks decent, but it looks like it's just about to do what everything else is already doing. And we do still have the negative 821 cross getting rejected. So looks like we're coming back down to like 223 or that low at 216. But if we get a big sell-off, 200 looks likely. This is the ETF on the semiconductors. So that's all I had on the list for today, guys. Ran a little bit long. Not really, though. A little over 2 hours. That was a good session. Anybody have any final requests, questions? Want to hear about a specific rant? I'll give you guys a second to respond. Definitely pay attention to how everyone is talking about all the stuff I have been talking about. We basically called out all these moves ahead of time, all this price action ahead of time on all these different assets. Exactly what we're expecting to happen, exactly what was likely to happen, and it's playing out perfectly. I still expect all the moves we talked about to continue. Nothing has changed in these markets. I would expect the Treasury to get up a little bit higher, the yields up to like 2%. I would expect the DXY to continue strengthening, you know, up to the top of that channel. I would expect stocks to continue showing weakness. You know, potentially breaking down from these key ranges. I mean, we'll have to see. Everything looks like it's getting ready to lose their 821 crosses. And that's just the stuff that hasn't already lost them yet. So this is going to be an interesting week. This is going to be an exciting week. There's going to be a lot of money to be made this week. And there's going to be a lot of money lost this week. if I'm correct, because I think we're going to see some massive moves, and probably not what most people are expecting. I mean, people are still extremely bullish on all these markets, and I don't think now's the time. Tether printing away. Yeah, always. I don't expect that to ever change. That's all new money coming in. That's all money. People are investing in crypto, investing their stimulus checks. How can we take advantage of this printing? I mean, get your hands on some of the free money, I guess, right? They don't give money to people like that. I mean, it's a weird situation, man. I think a good portion of the people that are getting stimulus money need it. And I think a good portion of the people that are getting stimulus money are using it to invest in stocks and pump up all these assets. I think the best thing now is wait for the markets to turn around one way or the other. Either wait for them to continue selling off and look for areas of value, or wait for the markets to turn back around and start getting some of these 821 crosses, or like start to show strength again. But I think right now, the absolute best way to take advantages is to build a cash position. And I know people don't want to hear that, but dry powder right now. I mean, a lot of these tech stocks and tech sector have sold off like 30 to 50%. I think traditional markets look likely to be selling off 10 to 20%, maybe more, maybe another 30 to 50% drop. I don't know. But right now, I think dry powder. The premiums are very high on precious metals, but they're basically selling off or consolidating. So that doesn't make sense. Cryptos are extremely overvalued and most of the charts look weak. Traditional markets are extremely overvalued based on either sales, which is bad, or earnings, which is real bad. I would much rather buy things that have a high earnings like price to earnings ratio than price to sales ratio. We have stuff with like 50 times price to like sales ratios. Do you realize what that means? That's so ridiculous. 50 times price to sales, because most companies are like operating on like 5 to 20% profit margins depending what sector they're in. So if you have let's say just right in the middle, let's say hypothetically 10% of your sales are profits, and you're operating at a 50 times price to sales ratios. So 50 times price to sales means it takes you 50 years for the price of your stock to be equal to the price of your sales, like ratio wise. So if you're operating at 10%, you have like a 500 price to earnings ratio. So that means essentially if you bought a stock and it just kept growing at the same pace, it would take 500 years to get your money back in like earnings. I mean, that's like crazy. Now, granted, there's other factors involved, like, assets that the company owns and, all kinds of different stuff, whatever, patents, all kind of things. But I mean, these are crazy ratios. And there's a lot of companies that are losing money that people are extremely bullish on, and they're like, this is going to be the next Tesla, this is going to be the next Google, this is going to be the next Apple. Well, how many companies die or fail in comparison to how many companies revolutionize the space? And then people always say like, oh, if we can just capture 10% of the market, if we can just capture 5% of the market. No one ever does that. How many companies ever capture 5% or 10% of a market? Very, very few. So that's like one of the worst arguments you could possibly have. I think people need to be very, very careful. We are very close to the top of a at least temporary bubble, if not like actual big bubble burst, where we could potentially be coming back to retest like those March lows. Now, I don't think it's going to get that violent. I don't think it's going to get that bad, but we don't have to have a horrible price capitulation. I mean, we've already had a lot of stuff sell off 30, 50%, like tech-wise. We don't need a price capitulation. If we get a time capitulation, it could be just as bad. What if prices don't sell off and everything just goes sideways, but it goes sideways for like 3 years. That's a time capitulation. If the markets just suck for the next 3 years and nothing happens, think about how many people will capitulate because their money will be tied up and they will need those gains, or they will need that money to live off, or they will need their profits or whatever. And then when people start taking money out of the markets, then they start losing that momentum, or just go sideways. They lose that momentum, and then taxes are going up. So now it's like, okay, should I rush and get that money out while I'm paying 22% before I'm paying 30% in capital gains? Like, you know, a lot of bad stuff could happen when they raise taxes as people get frightened. You got a lot of old people that are still in the markets, potentially at or past retirement age. We could have a stagnant economy, stagflation takes place. There's a lot of bad stuff that could happen even if the markets just go sideways. So I think dry powder right now is the best thing you could do. But taking advantage of all the tether printing, I mean, all the money printing, all the tether printing, all that stuff's already taken place. Like, you should have already been in all these assets. Like, you should have been at Ethereum from 80 to 120 bucks. Should have been in Bitcoin from $4,000 to $10,000. Should have already been in all these assets. Now, the last thing you want to be doing is buying the stuff at the top of a trend. In my opinion, that's the last thing I want to be doing. So for me, I'm building a nice cash position. I think paying down high interest debt like credit cards or anything like that is key. If you refinance your house and you got a mortgage like 30 years at like 4% or something like that, don't worry about paying that down. That's great. That's the cheapest money you'll probably ever get. Like, that's great. But, I don't run any credit card debt after like a month or anything. I don't have any debt. But I think the best thing to do is pay down all your debt, high interest debt, as fast as possible. But even at these levels, I don't see anything that's great for deploying capital in right now. There's very few stocks that look good. And if they do, they look fundamentally good, but not necessarily technically good. I think everything looks overvalued. Even I'm a strong believer in like the beginning of a commodity bull cycle, or like commodity super cycle. They could last another 6 to 15 years. But even most of those things like copper, aluminum, silver, steel, gold, uranium, most of those things are already like priced up pretty high. Oil, I think probably like realistically, depending on what OPEC does and the Saudis do and everything, I think, there's still some meat on the bone for oil. It's still trading well below its all-time highs. I think uranium still well below its all-time highs. Silver still well below all-time highs. But fundamentally and technically bullish or look strong. But yeah, I mean, I gotta say, like, honestly, commodities. I think that right now, cannabis sector looks like it's getting ready to turn around and enter a long bull market. I think, precious metals, obviously, a lot of the energy sector is turning around, getting ready to enter a long commodity bull cycle. Copper, yeah, all those, man. But I just honestly, there's not a ton of great stuff to get into right now if you're not already like positioned in them. Um, I think the housing sector is extremely overvalued. Uh, you know, Lumber, all that stuff. Like, it's to the point now where you can barely buy a home if you want to because there's so little supply and so overpriced. Like, you go put an offer on a home and it goes for 20% over asking value. I mean, that's not good. That's not functionally a good idea or a good thing. And then on top of that, I mean, home builders are going to stop building because, a house is supposed to cost $250,000, and now it has to be $300,000 because it's another $50,000 in material. That's not good. That's not good at all. Um, what do you want? DNT, like Dentacoin? Or wait, District OX? Is that what you want? District OX, right? I'm assuming that's what you're talking about. I think dent is DENT. Yeah, I mean, in all reality, I think a lot of this stuff's got to come back down. Money's got to get a little more expensive again. Prices got to stabilize a little bit. The money printing can't just go on like indefinitely. Yeah, I mean, swing trading is great. I mean, even if you're just learning and playing around with it, I mean, but honestly, in my opinion, the best type of trading or like trading technique is just moving averages, just on shorter time frames. I mean, moving average trading is the easiest, most effective type of trading. EOS. Oh, I put it on to BTC. Did you want it to dollars? I think it makes more sense. Makes more sense to chart it to dollars. Man, this thing still looks like shit. Wow. I mean, this is probably a dead project. Let's be real here. I mean, you got consistently lower highs forever. You could argue that we broke out, of like this downtrend, depending on how you want to look at it. Looks like we're getting ready to break into an uptrend, but I mean, why is this taking so long in the cycle? I mean, we got the 821 cross right here. Look at every time we got the 821 cross. Got it right here, gave it back. Got it right here, gave it back and then some. Got it right here, gave it back. Got it right here, gave it back and then some. Got it right here, gave it back. I mean, this looks to me like just every time it gets any kind of positive price action to the upside, people just want to get out. I remember this too right here when it hit like 22 bucks. That was when they like had that big meeting and they were talking about like consensus from all the different like what was it? Voting. Man, what a shit show. This thing is garbage. I don't think it ever gets back up here. Key resistance right there at $5. If it breaks through $5, it's going to 750, and then it's just going to get hammered again. But I mean, it's barely even putting in higher lows. This looks like shit, man. If you're already in this, there's a legitimate argument. If I was in something like this, there's a legitimate argument. I would just cut my losses and go into something bullish. I mean, it sucks, but or, I mean, you could hold out till it gets back to like $8. That's a 100% move. But, I mean, this thing just looks like shit. But again, you could argue that, I mean, look at this knife stab right here, and then it gets wrecked. Look at this right here. Knife stab, and it gets wrecked. Knife stab, and it gets wrecked. So, I mean, we're starting to curl back over on the Stokes. It just looks like it's going to get crushed again. Looks like it's attempting to rally, and it's just going to get crushed again. I think it's headed back to $3. Could go to. It could retest 5 again, $6. I think it fails though, but $8 I guess is your target. 870, 850. But I would be looking to get out of this. It's garbage. And then District OX. I thought it was OX, like 0X was the ticker on this. DNT? I don't know. I don't know what I'm talking about. Maybe not. Um, 34 cents. Looks like it's trying to retest that all-time high. We got a high. We got another high. We got another high. We're back at the high right now. It looks good. It looks bullish overall. We were able to cross back over on the daily, like above the slope line. Getting ready to cross the Stokes back to the upside. This looks like one of the more strong crypto charts in the space right now. 8 and 21 still crossed to the upside. We saved it. Yeah, this looks bullish overall, more bullish than most or just about any cryptos. Overall, looks good. I mean, it looks like it's just getting ready to break to a new all-time high, honestly. At least on Coinbase. Yeah, I'm pretty sure this is like all-time highs for this bad boy. I would expect it to get, if it breaks out here to the upside, I would expect it to get up to like 56 cents. It's a nice trade, really. Next target after that, 80 cents. It's like a 2x, a little over 2x. This looks good. One of the better cryptos for sure. Definitely one of the better cryptos. Technically. All right, guys. That's going to do it for today. I'm going to wrap it up then. Appreciate everybody stopping by and hanging out. Appreciate the likes, positive support. Make sure you check us out on, we'll do Thursday again, 8 p.m. EST to 10 p.m., 2 hours. If you have any requests, comments, anything like that, feel free to share them ahead of time. I'll be glad to take a look at them. Or just make sure you tune in from 8 to 10 Eastern Standard Time on Thursday. And you guys missed the static videos? Would you like it if I did like a 15-minute video every other day or something like that in between live streams? I'm curious about that as well. So it's not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. Crypto Trend Trader, and I'm out of here. Yeah, of course, brother. Thank you. Appreciate you guys tuning in. Appreciate all the support. Everybody being part of the channel. Have a good one. Everybody stay safe. Make that money. Protect your principal. Protect your capital. And careful who you listen to. And I'm out of here.